Make sure I'm unmuted, going. Hey, what's going on, Cav? Ron, good to see you. Erla, great to have you. Miss Jen, good afternoon. Guys, I am pleased as punch to be here today. Hey, Bob. Bejoy, nice to have you. I smile just a little bit because joy is in your name. Vittorio, great to have you, man. Um, wow, end of the week already. Guys, we're going to go full rock star today. We're going to have some fun. Um, Did you guys see there was a big old spike this morning, wasn't there, at 8:30? Did you guys notice that? Did anyone see it? I was looking, I was answering emails and doing busy work this morning. Haven't really looked at the market, but the one thing I noticed was right at 8:30. Look at that 15-minute bar. Holy smokes, guys. That is a reaction from news. Um, And there's two types of people in the trading world. There's the people that have been absolutely beat up and burnt by trading into news. And there's the people that will because you forget to check it. I am both. I am absolutely both. So every morning, what day is it? It's Friday, Peter. Friday, I'm talking about. Um, Every day I come to forexfactory.com. It's Friday, June 6th. And guys, I'm just looking for that news because it can disrupt patterns. Um, Jen, when you circled your tails, did you remember to look for news? I didn't. When I did my study, guys, so formal apology to everybody in the room. If you looked at my study, it turns out that I accidentally circled a tail during crude oil inventories. I have been thoroughly reprimanded, so don't worry, it won't happen again. But you didn't. Why would you? You're just looking for tails, right? So, guys, if you go back and do that historical study, I guess you could go check the news to make sure that you don't trade into it. But remember, that study is designed to recognize patterns, guys. That design is it's designed for patience. Every morning, guys, I come here, I look. Red boxes can ruin the day. Red boxes, sometimes it works in your favor. You accidentally do it. It's never worked in mine. So this is a part of my routine. My routine every day, pour a cup of coffee, open my charts, and check news. And then I make a note. Hey, don't trade here. Sit on your hands. Don't do it. It's not worth it because it can disrupt your patterns. Everything that I talk about, ladies and gentlemen, Nexgen website. Um, no, Jen, I think it's good to go through it because what you did, and for those of you that don't understand what she did, we are going to talk about it. I talk about it every day at the end of my PowerPoint. Jen went back and she looked for her rules to be met, not in a live market, but rather just historically, to go back and look for the advantages on the large chart, to circle tails, and to see if it fit her plan. Because very often as we go through and we're learning these patterns, um, oh no, oh no, oh no. Is that better? Did that come back? Um, Shoot dang heck. I'm going to do the easy reboot there. Did that one work? Can you guys hear me now? Can anybody hear me in the room? Nobody can hear me in the room? Rats. Sorry, YouTubers. We're going to do a little something something here and see if we can't get back into Discord. Maybe you guys can hear me in Discord right now. Next-gen software services. There's my education room. Let me get in there. Traders chat, education. That's not it. It's always hard to find the education room. You guys have me now? Can you hear me now? No sound still. Nobody's got me. All right. Shoot. My microphone. Yep, my microphone is still picking up. I'm gonna have to kill the room and restart. You will be bumped. Please come back. All right, we're going to disconnect and end. So for you guys in YouTube world, sorry about this. Sometimes Discord doesn't give me, it kills the sound for whatever reason. I don't know if it's an influx of people, but whatever the challenge is, sometimes this happens. So what we're doing is the full reboot here. And when I do that, it usually fixes whatever the problem is. So we're going to come in and take a look and see if these guys can hear me. We good? Awesome. I talk to YouTube when I do this. It's kind of funny. I'm trying to explain to the YouTube people why I just stopped and I'm rambling. So we'll give it a second and we'll let people come back. And we'll get going and have some fun. Oh man, what are we going to talk about today? How about a high probability trend trade? You guys cool with that? Maybe you've heard it before. High probability trend trade, guys. This is your first trade. I feel like every day I say it. When you learn the high probability trend trade, it opens the door for the other trades. When you learn the high probability trend trade, it opens the door for more opportunities, for different entries, for different management, for all the different things that you can do with the software. So when I talk about a high probability trend trade, some of you are going to feel like you're being shackled to this one trade that forces patience. But what we're really doing, guys, is we're talking about a trade that has been proven to win more than it loses. We're talking about a trade that this one pattern, this one trade, offers the opportunity to find some success as a brand new user, even though you really have to be patient and wait for it. But the most important thing that this trade does for you, and maybe I don't say this in the fashion that I should, is this trade is the one that's going to help you understand advantages. This is the trade that's going to help you understand how to read your indicators, how to recognize when things are going well, when you have an edge. The high probability trend trade is not the only trade that you can take with the software. There are a million opportunities based on your ability to read the indicators. So I teach this classroom with the desire to help you understand indicators first, guys. Because most of your day is chart reading, most of your day is waiting, most of your day is doing nothing. In this high probability trend trade, guys, all it is when the rules are met, it describes a pattern. It describes a pattern that can be tested, that can be back tested, that can be proven that it wins more than it loses. It's not the only trade that the market presents. But the great thing is when you learn this trade, when you focus on this trade, when you get to the point to where you can recognize three simple rules being met, you're going to understand these concepts. You're going to know where the market is likely to continue. Continuation points, these are actually your entries for the highest probability trend trades. If the market is going up, there's typically a bounce in the middle of that move, and the continuation point is that bounce. That's your entry. You'll know where the market is likely to go. You're going to be able to use your indicators. You're going to see these Fibonacci areas. You're going to have momentum indicators, and you can just say, wow, with this much force in the market, with nothing in the way, it has a really good shot of making that next fib. Maybe I'll hold for it. Maybe I'll get paid at it. And then finally, you'll understand where the market is likely to stop. Understanding what a termination condition is. That's what these are. And these are just areas that could halt the forward progress of the market. You're going to know about them before you ever get to them. You're going to see them looming in the distance. And when you arrive at them, you'll be able to make the choice. I don't want to trade into it. I don't want to go into that area because that area could create a big, ugly, untradeable bounce. So we focus on chart reads first because chart reads identify advantages, guys, and advantages are why we trade, why you trade. The advantage of understanding momentum through rule number one, when a market has strong trigger lines, we call that momentum. And momentum is hard to stop. And momentum really pushes a market. And momentum can break key areas. And momentum is rule number one for a reason because it creates this awesome advantage. Rule number two says don't trade into areas that could stop the market. No termination conditions. When rule number two is true, you have the advantage of a clear path. Once you understand advantages like momentum and a clear path, once you can put those two together, what happens is you begin to see more. You begin to see more opportunities, more entries, more exits. Um, and you begin to speak to yourself in terms of advantages. So you're looking for the positive, you're looking for the good, you're looking for the reason why it getting into the market makes sense. Initially, when you have momentum and a clear path, you're going to define your entry area, and that's that point where the market is most likely to continue. The advantage of rule number three is one of accuracy. It's defining where bounces come from to go with momentum, to travel in the direction of a clear path. Your entry area is specific to this trend trade. This is not the only entry that can be taken with the software, guys. This is your first entry. This is your first trade. Ron C., here comes your nickel. The high probability trend trade is typically not your get rich trade. The high probability trend trade, the best of the best trade, is the one that teaches you how to read the indicators, how to recognize advantages, so that you can create your plan, so that you can find your best trade. But until you're at that point, a little bit of study, a little bit of focus goes a long way. These three rules only take two charts to recognize. We use a large chart, thank you for that, and we use a small chart. The large chart is a very slow chart, guys. It's a very broad stroke of a brush. It shows the overall opinion of the market. Your large chart, using the most current bar that's printing, it will define the direction of the market, let you know whether we're in an uptrend or a downtrend through the background color. It will define the momentum of the market. Rule number one, it'll let you know if you have that advantage present. It'll also define the areas of the market. It'll let you know if the market has reached an area that could halt forward progress or if it has in fact cleared those problem areas. Rules one and two are met on the most current bar of the large chart. Rule number three is a small chart rule. Rule number three is an entry rule. And when everything on this chart gives you your rules met inside of that one bar, there's this push back, there's typically a bounce, and continuation down. This is the inner workings using a smaller, faster chart, a refinement chart, to capitalize on that big, slow advantage producing large chart. And this is where entries come from. And this is how you're going to be able to reduce risk dramatically. This is how you're going to be able to capitalize and have more room to your targets, guys. And we did some great examples yesterday of it. We're going to do it again today. We're going to do the same thing we did yesterday. We use these two charts because my brain works in pictures very much, and this picture helps me a lot. Who are you trading with or who are you trading against? I think of the large chart as the men and women, a huge crowd of people with a lot of money, capable of producing a trend. They wake up, they have their coffee, they say, what a great day for the market to go up, and then they make it go up. And they get so excited about making it go up that they create the momentum that I'm looking for to have that advantage. And they're so in tune with these key areas that that's where they make decisions, guys. And they typically make decisions at the areas on the large chart. So I love to follow the large crowd. I like to go with the large crowd. They're like the world's most awesome lazy river. And I am floating down at pina coladas and sunshine, guys. The small crowd is like a fighter group. These are the men and women that still have more influence and money than me, and they can create what's called a pullback or retracement. And when everything says up on the large chart, they try to push down. They understand that this is a short push. Maybe they're taking quick profits. Maybe they're trying to get a better price for entry. Their reasoning is, it doesn't matter to me. But they do it often, and they typically fail 70 to 80% of the time. So rule number three on that small chart will actually pinpoint where their failure is most likely to happen. And it happens at areas inside of triggers, guys. It's a very consistent look. It's just a pattern that is repeatable. So remember who you're trading with. Remember who you're trading against. As we move forward in the hour, guys, this is how the day works. We are going to learn the trigger line of Fibonacci rules for when it's okay to trade. I don't tell you when it's okay to trade. I don't ever tell you to take trades. I don't tell you to enter the market. I don't tell you to exit the market. My job is to teach you to read the indicators so that you can recognize an advantage so you can make a decision to enter the market. Most people finding success with the software believe that it's okay to trade when their rules are met. Initially, brand new users, your rules may be the high probability trend trade rules. So it's okay to enter the market when I have momentum, when I couple it with a clear path, and then I define the entry on the smaller, faster chart. And it's okay to not be in a trade if this doesn't fit, if my rules aren't met, if the recipe is not complete. You're going to grow outside of this. But as a brand new user, a little bit of adherence to simplicity tends to produce results. Everyone in this room has the ability to simulate, to practice, to take trades on simulator without fear of loss. Guys, you can't lose money on simulator. All you can do is take great lessons. So when you simulate, when you practice, post your pictures in the room. I'm a little wound up about this today. When you post in the room, all I want you to do is describe the momentum that you see. That's rule number one. I want you to describe whether or not you had a clear path, if it was a termination, if it only had the potential to break, and I want you to show me where you entered. And when you do this, guys, it doesn't bother me if you make mistakes. It shouldn't bother you as you're in a learning process. But what we're going to do is we're going to hold hands and we're going to look at your chart and we're going to make sure that your chart read is accurate. We're going to make sure that you identified momentum correctly. We're going to make sure that you identified your path correctly. And guys, when we talk about your entries, we'll talk about whether or not it was the lowest risk entry that you could have taken. If your stop made sense, if your profits made sense. So I'm not here to tell you you did a good or bad job. I'm here to make sure that you're reading your indicators accurately. And if I see something that may be helpful, I'm going to present it to you. And it's up to you to decide whether or not you choose to accept it. It's like a private session, guys. What I tell you in the room is exactly what I would tell you if we were in a private Zoom conference. If you and I were sitting together in a room looking at the same chart, you're going to hear from me exactly what I would tell you in that environment. Not everybody likes feedback. I didn't. I hated feedback. It killed me when John Novak would tell me, Mark, you did it wrong. That's all I heard. Mark, you did it wrong. But what he was really telling me, and what I'm going to tell you guys, is hey, I see what you did. I see where you did it. Here's how you do it better. These are the things that'll make you a better trader, guys. That's my goal each and every day. If you post in the room, you're going to get everything that I have in my head. If you don't post in the room, I can't help you because I don't know you need help. We're going to simplify today. We're going to talk about the high probability trend trade first. We're going to focus on it because we just want to gauge those advantages. And there's this wonderful thing that happens that when you start speaking to yourself in terms of advantages, what happens is you start to say, wow, I have more advantages than disadvantages. I may have to grow my plan a little bit. I may have to find other opportunities. Until you can do that, the plan that I give you keeps you focused on the best of the best. It is not a death sentence to boredom, guys. It is a stepping stone on your learning journey. Your job is to learn the looks that you commit to understand the Fibonacci and trigger looks so that they're easy. The first step in becoming a confident trader ASAP is post in the room, guys. Get the feedback, accept the feedback. Um, if I hurt your feelings, I'll apologize in advance, but they're your feelings. Send me a message. Go, hey, I think you're a little harsh on that one. We'll talk about it. But I'm going to give you honesty, guys, because honesty creates growth. The second thing is use the spreadsheet. I give the spreadsheet every day. Excuse me. The spreadsheet, it embraces the idea that the more times you see the same thing, the more times you look at a picture and you have a description of what that picture means to you. Repetition creates recognition. So the spreadsheet is one of the least often used tools, but it becomes a very effective tool if you use it. The first tab is what it looks like in green to have the rules met. So if my goal, and I'm not going to be there in the beginning because I'm brand new, how could I be there? But my goal is to always trade with three advantages, to always get into the market with the best of the best scenario so that I have an edge. which means that I need to know the difference between strong triggers and weak triggers and a clear path and termination conditions. And I need to be able to define my entry because this is my plan in the beginning. So I've given you this, and I'm going to give you a way to study it. Go through and look at these. They describe the individual rules being met, and then ultimately, you'll piece those three things together to create a trade. There are client trades, and I had to put a disclaimer on here. These are the client's perfect trades. These aren't all high probability trend trades. These are clients using momentum, using path, defining entries, and finding success. And they've done it so well that I've stolen them because I believe they're a good study tool for people that are coming up. So click on the links in here. I guess over the weekend I'm going to clean out the dead links. So there are some dead links, but there's almost 500 pictures. And if you go after this with the idea of always looking for momentum, path, and entry, and know that some of these are going to sidestep those advantages because they're the client's trades, not mine, you'll begin to start to see the repetition. You'll see that areas typically come from areas inside of triggers. You'll see that momentum tends to push the market, guys, and all it is it's creating recognition through repetition. How to define an entry. Entry sequence short and long, guys. Getting in at the best of the best spot. Management, and the plan that I give you is going to have a very basic management plan. And once again, disclaimer, it's a very basic management plan. You're going to grow. When you're chart reading, guys, you're going to see more. You're going to do more. I coddle you with the most conservative rules as a brand new user. So here's a lot of ideas of how management will grow, how patterns will begin to materialize. You have a spot to build your plan. This is your plan. Trading is a solo sport, guys. So when you begin to study, maybe all you're looking for is high probability trend trades. Put 20 pictures in there so you recognize the pattern. And then you start to say, wow, I've noticed that when I have 2 out of 3 of those advantages, I can still find a way to capitalize. Your plan is changing. It's a living document. Start throwing those pictures in there. Talk about how you're going to manage it. When you begin to see the things that are going to grow your plan, take pictures, take patterns, post them in the room. Hey, Mark, have you ever seen this before, right? Paul didn't have a trade here. Paul said, this is a great setup that I didn't take. I want a top to trade from. 21.3 says I may have to wait. 21.3 says don't even think about a short. Great setup I didn't take. I want a top to trade from. Same thing. Odds favorable momentum, not quite a clear path. And then Paul is recognizing through study that when this is screaming up, when this is screaming up, when this is screaming up, I'm going to be able to find a way to capitalize on this. It doesn't fit my plan right now. Maybe this isn't my best look yet, but let me take some pictures. Let me put it in there. And Paul, you're absolutely right. When price pulls all the way back to support and everything says up, maybe a little confirmation bar to get you into that trade to carry you to the next area. So this is just an observation put in the room, but this is how Paul is going to grow his plan. He's taking pictures of patterns that he sees in the market. Finally, trade tracking. Guys, trade tracking is where when you post a trade in the room, when you say, Mark, here's my entry, here's my exit, here's the advantages that I saw. You can take that picture, drop it into here. You're going to come back and study this. So make sure you're annotating your charts. I encourage you to describe momentum and path, not because it has to be there, but because you're going to begin to see that the trades you're finding the most success with typically have both. The trades where you struggle, where they dance, where they fluctuate, where they make you bite your nails off, those are typically void of one of these. And then you'll get feedback. Every trade you post in the room, you'll get feedback. You will hear my take on your read for momentum. You'll hear my take on your read for the path, and you'll get my 2 cents on entry and management. Guys, the feedback from class is designed to help you recognize the things that you're doing well. We will celebrate, we will high five. Guys, I will give you gold stars and scratch and sniff stickers all day long for your victories. But I'm not doing my job as an educator if I don't point out the challenges on your chart, because it's those challenges that you're going to grow from. So if you made money, maybe you got lucky, guys. Maybe you're trading in determination conditions. I'm going to tell you, hey, guess what? There's a termination condition. There are some outstandingly successful traders in this room, and I still tell them that they trade into termination conditions. Maybe you're jumping in early. Maybe you're getting out late. Guys, I'm going to help you see this, and I'm going to say, hey, you're trading into termination conditions. Here's how you fix it. Here's a recipe for getting away from that. Here's the look that you didn't notice in the moment. Here's how you notice it before it happens. Here's what to look for. So the feedback is going to help you grow a little bit because it's going to keep you focused on the things that work. It's going to keep you focused on the things that you're doing well, that are creating confidence. And it's also going to help you notice the patterns that you have in you that might be taking that success away. We all have a thing, guys. My thing was trading in determination conditions. I did it religiously, like I was getting paid for it. And then when I finally overcame that problem, my thing became early entries because I started getting so good at chart reads that I would form opinions. I would say, oh, here comes my trade, and I would just enter anyway. So I have to go back and study this every day. I have to look for the challenges that I have so that I can correct them. This spreadsheet is an amazing tool if you use it. So we're going to go through the day. Here's what we're doing, guys. 3 rules, 2 charts. Let's learn them. I'm going to break them down individually. We're going to talk about what they mean to you in terms of advantages, how to recognize them. I'm going to give you stuff to study them. I want you to be very vocal if you have questions. Yesterday, we had amazing questions in this room. Yesterday, we had people raise their hand and say, Mark, give me a little something more. Let's talk about this a little bit more. And I think yesterday was probably one of the best classes we've had in a while. You have the ability to post, guys. I don't care if it's a trade, if it's an observation, if it's study work from yesterday. If you need help with your charts, if you want feedback on your charts, post them in the room. I love it. It's my favorite part of the day. And simplicity is the goal initially. You will see more as you grow with the software, but the more focused and the less you give yourself to think about in the beginning, typically the easier it is to find the success you're looking for. Let's take 3 rules. Let's look at them individually. Let's turn them into a trade, guys. Large chart, big chart, slow chart, large crowd. They have to have strong triggers. Strong triggers creates momentum. And strong triggers is defined in an uptrend. When the background is green, your small triggers will be up and above the large triggers. Your large triggers will be widening like a shark coming up to get you. And the small triggers are above. Guys, it's the space that's created between small and large triggers. That space lets me know that the odds are favorable for the market to continue in the direction of the trend. In a downtrend, when the background is red, my small triggers are below the large triggers. My large triggers are getting wide, and it's that space that's created between small and large that lets me know that the odds are favorable for the market to continue down. Odds favorable momentum is the battle cry. Odds favorable momentum, that separation. You're going to see it annotated in charts, OFM. When you have strong triggers, you have the best of the best looking momentum. When you have strong triggers, the market is likely to push in the direction of the trend. When you have strong triggers, this is what we're looking for. When areas have the potential to break, momentum gives us that potential. Strong triggers is not an all-day endeavor, guys. Strong triggers, that separation, that gap is the best of the best. This is the first way we're going to use triggers to have the advantage. Because when the small triggers return inside, this is weakness. This is where you don't have the advantage of momentum anymore. So if you are a brand new user with me, life is easier if you say I either have momentum or I don't. But I'm going to let you in on a secret. You're going to grow with the software. Odds favorable momentum is always the best for short trades. And with both triggers down, when one of the 2 small triggers is inside the large triggers, this is the first sign that momentum is slowing, but it's not gone yet. Short trades can still be taken as you grow with the software because you're recognizing advantages. You know that things are slowing. And then when both triggers are down and inside, you have a weakening, a slowing of the trend. Anything can happen. I love that phrase. Is the term you're going to hear in class, guys. You can still take a short trade. but you know that you're taking it without momentum. It has to be managed well. This is where I start you because this is the highest chance of success. This is where you end up because of your ability to read the indicators. So is everybody good? This is typically the easiest lesson. If I go to a large chart, whoops, I almost went to a large chart. That was so close. I think I closed it out. Sorry, hold on. Now I have to close that workspace and not save it. So let's go to this large chart and let's talk about momentum, guys. Separation between the small and large. This is the best of the best look. This is the one that typically pushes the market. This is weak triggers. This is no momentum. And guys, the market still goes up. I'm not in control of that. But what I'm trying to get is that this is the highest probability look. This is a less than high probability look. Strong triggers down, separation, the market pushes, it breaks an area, they begin to weaken, and there's a retracement. Strength up, breaks, and then there's a retracement, and then nothing matches, there is no strength, and the market dances. So, can you guys give me a why in the room? Strength, weakness, and then eventually you'll grow beyond that very basic black and white. Once you have momentum, guys, we're going to make sure there's nothing in the way. We're going to make sure that there's no termination conditions, no areas that are likely to stop the market. These termination conditions are where the large crowd typically makes decisions, guys, and they're easily summed up as horizontal lines on a large chart. So you're going to see divergence high lines, a magenta line. It prints from a pivot right up here at the very top. And if there was a loss of momentum in that push up, the software calculates it behind the scenes. And right about 2.5 bars down, you're going to see a pink line. And it's going to say, hey, guess what? The buyers didn't have a lot of giddy up in their push up. At a low, you'll see divergences, and they're a cyan line. And all it means is that when the market heads back up, if your software recognizes that momentum was not following all of that price action, you'll see that cyan line. And it's just a visual. Hey, you've lost a little momentum here. The sellers didn't have the push that they thought they were going to have. Divergence lines can behave as termination conditions. You're going to see Fibonacci resistance. That's the solid red line. It runs horizontal across your chart. And guys, this is an area that could stop the market, that could create a bounce, that could create a reversal. It's also an area that could break. But when you recognize it and you see it in the distance, you're going to have the skill set to make a decision on whether or not you should take a trade to it, into it, from it. Fibonacci support in a downtrend, it's the same thing. It's where the market could bounce, where it could break, where it could create a fight the way it did right here between Fibonacci resistance and support. You're also going to see yellow 1-to-1s. You're going to see a mid-band. And guys, these are where decisions are made. So when we're defining a termination condition, there's very specific language. The first thing is price reaches an area. Price reaches a divergence high. Price reaches Fibonacci resistance. Price reaches yellow 1-to-1s. And when price reaches the area, we're done with price. The decision-making process begins. There's options. The market may smash right through that area of resistance. The market might dance and bounce as the buyers and sellers fight. The market may reverse completely, guys. One of the things that you'll never know is what the market's going to do. I encourage you to avoid words like it should, it will. Guys, if price reaches this area, it may reverse the market. And what's going to tell you that it's more likely to reverse the market is if your trigger lines remain below resistance. So when price reaches resistance, ask yourself, where are my trigger lines? If small and large are below resistance, guys, this area could stop the market. Your advantage of a clear path is no longer present. Rule number 2 says just don't trade into the area. If it bounces back a little bit, don't go long into the area. Just wait for it to break. Wait for it to roll. Look for your advantage. Price comes down, reaches Fibonacci support. Yellow 1-to-1s, divergence low. Once price reaches there, the decision-making process is set off. I no longer worry about price. I look to my triggers for the answer. So I ask, where are my triggers? If my triggers remain above support, support's a termination condition. That reaction could happen. It could bounce, it could break, it could spike, who knows? I choose not to be a part of that reaction. I choose not to trade into the area. So guys, rule number 2 is going to let you know where the market may change directions. If you're in a long trade, this is where the market may go if there's a lot of momentum. This is where it may stop. This is a great place to take profits. Right here on the right side is price reaching resistance. This is what it will look like in the moment. Price reaches resistance and you say, where are my triggers? Small and large remain below resistance. This is a termination condition. The highest chance of success, your edge, your advantage comes from not trading into that area, but rather waiting for the reaction. Is everybody good with that? You know about these long before you get to them. And rule number 2 is the most broken rule because it forces you into being patient. Areas break all the time, guys. Areas also create reversals. This is what it looks like when both happens. So right here, price reaches resistance and the triggers remain below. And guys, this is a termination condition. This is a moment to pause, to stop, to wait, to say, I don't have a clear path. Let me just relax for a moment and let my triggers tell me when it's okay. And your triggers tell you it's okay when both the small triggers and the large triggers get above an area of resistance, or both large and small triggers get below an area of support. This is what we call a breakout of Fibonacci, guys. And what it does is it says, okay, I can't trade yet because my rules say no. And then once small and large get above, it says, okay, let's look for that momentum. Let's couple it with a clear path. Let's see if we can find an opportunity. The same happens from a reversal, guys. Price reaches the area. None of the triggers break. We sit on our hands. And the reaction is that everything turns the other direction. And guys, when it does, the price bars are going down. They haven't reached an area. They're not struggling to get through an area. This is a clear path from a reversal, and the path remains clear until you reach the next area. So you can either wait for the breakout or trade from a reversal. When you trade from a reversal, it's a pretty good feeling. Is everybody good with that? Small and large triggers must get through an area to define it as a broken area, where the market must reverse from the area, in which case we'll look for the trend trade rules to be met the other direction. The easiest, and there's 3 options. There's one option that I didn't give you. I need to rearrange my slideshow, I think. Absolutely no trades into a termination, says the rules. Waiting for a clear path, says the rules, not Mark. There's a middle moment. There's a transition as areas break, as you're getting that Fibonacci breakout. So this kind of goes through the life cycle of a Fibonacci area breaking. It starts with no triggers through the area. The area is not broken. The path isn't clear. Rule number 2 is not met. I choose, and you have the same option, not to trade into that area, to wait for the reaction. When the small triggers smash through an area, when the small triggers get 3 or 4 points above an area, and you have strong triggers, what that momentum, what that trigger location tells me is that this area has the potential to break. This area has so much momentum in the move that it could break, but it's only potential. It's not a clear path yet. If you choose to take a trade with potential, you may have to manage a little more assertively. Your chart reading is going to help you do that. This is the second trade in the plan that I'm giving you. But for the brand new user, having both small and large triggers above the area, that's your path to success. That means that not only do you have the best of the best momentum, but there's nothing in the way to create a bounce. And what you're going to find is that the easiest trades you'll ever take, we saw this a lot yesterday, the easiest trades you'll ever take will have rules 1 and 2 met. These tails on the large chart are potential entries. That's that refinement process. The pullback on a small chart creates the tail. Guys, you can go back and use these to study. Jen did the study. We're going to see how she did it earlier. But I can tell you from 5.5 years of teaching people to read these indicators, when you understand that separation is strength and you can identify that there's nothing in the way, these are the easiest, most stress-free trades you'll ever take. There is one termination condition on a small chart, but before we get there, I just want to ask, crude oil went off to the races, didn't it? I do want to ask, is everybody good with that? And let's just look at this big snapshot. This is crude oil yesterday morning, it looks like. And I'm just going to put a box. Every time price hit an area and the triggers weren't able to break it. And I'm not even going to do potential to break. I'm going to do pure termination conditions. Pretty cool, right? That's how many times Fibonacci would have ruined your good time had you traded into it. There were times where they broke, where you had the easy look to get to them. My hope for you guys is that you realize that termination conditions on a large chart aren't based on the one time that they break. This is thousands of pictures and a lot of study that says if price reaches an area and the triggers remain below resistance or above support, that area is more likely to create an untradeable bounce than it is to just arbitrarily break. So an advantage is had when the path is clear. That's large chart. There is one time on a small chart. There is one time on a small chart that it will talk you out of a high probability trend trade. 3 divergences in the same price range is the only time I won't look for an entry on a small chart. 3 divergences, 1, 2, 3 losses of momentum is giving me a heads up. It's saying things might be changing and you can't see it on that large chart yet, guys. So the large chart has momentum. The large chart has the potential to break, but my small chart is saying, hey, look how you're losing momentum with that potential to break. And once the third one prints, that's where the market heads back up. This is the only time when the rules are met on a large chart that a small chart should talk you out of a high probability trend trade. Is everybody good with that? Yes, good, awesome. One of the things that happens when you're a brand new user is you'll have a misunderstanding of rules, guys. This is why I ask you to post in the room and tell me what you see. Because if you tell me, hey, divergence kept me out of this trade, we go back to the conversation about how it takes 3. So large chart has momentum. Large chart has a clear path. Let's go define an entry, guys. Let's pick the best of the best spot. And your entry is very precise on that pullback, on that fight from the small crowd. It's so precise that you'll be able to use a limit order. A limit order waiting at an area inside of triggers. Triggers will define retracements, guys. Triggers are where price typically returns. So on a large chart, you'll see it a lot. You'll see price accelerate from the large triggers and it'll snap back to it. And price will go away from the large triggers and it'll snap back. And very often, price comes down here. That tail you see pulls back to those large triggers. So we use that idea that on a large chart, the large triggers help us define where a pullback may occur. On your small chart, you also have large triggers. Where's my small chart? There it is. And very often, price pulls back to the small triggers on the small chart. So what we've done to help you define entries is we've put both large and small triggers on the small chart. The smooth triggers are the 5-1 triggers. They're native to your small chart, to your entry chart. You can use these smooth triggers versus the small and say, hey, look at the separation. I have strong triggers on a small chart. These stepped triggers are from the large chart. We call them synthetic because they're from a different time frame. But what these trigger lines do when they work together is they define collectively where price is most likely to return. This is your retracement zone from the top of the triggers to the bottom of the triggers. Now I'm going to show you a picture because Jen said, I don't know where I got favorable large triggers from. I'm going to show you exactly where you got it from, Miss Jen. Favorable large triggers means that your large and synthetic triggers are overlapping. Favorable large triggers means that because of that overlapping, you have the smallest point where the market is most likely to retrace. It is a different spelling than was, oh, okay. Favorable, oh, you put the U in there, don't you? Like color as well. So guys, when they're overlapping, you have the littlest itty bitty tiniest spot where the market may retrace. And then when you put fibs or mid bands or yellow 1-to-1s in there, you've got the smallest window of opportunity, the smallest point where the market is most likely to bounce. This is the best of the best look, guys. I'm going to be really honest with you. This isn't the only look. Very often, you're going to see these trigger lines separated from one another. There is going to be an increase in risk. So the tighter the large and synthetic, the more accurate the entry, guys. So here's how you define your entry zone. Everything begins with a pullback. Everything begins with a down bar on your small chart. This isn't a trend changer. This is just the seller showing up and deciding to fight against all of the momentum, the clear path that's been established on the large chart. The reversal bar is not your entry, guys. This is a little bit of a loss of momentum. If you couldn't hold your water and jumped in over here, or maybe you took a momentum trade, guys, this is your loss of momentum. That's a great exit condition. So when the reversal bar prints, I'm going to define where the retracement is most likely to go, somewhere from the top of the trigger lines to the bottom of the trigger lines. But trigger lines aren't bouncy, guys. Trigger lines are not where we're expecting the market to ricochet and launch in the direction of a large chart. We need areas. Fibs, midbands, yellow 1-to-1s. The same way on a large chart, these areas can stop the progress of a trend. On a small chart, they can upset that little retracement and create a bounce in the direction of the trade. So we're going to create a window of opportunity. I love that phrase. And your window where the market is most likely to continue will extend from the highest point of support to the lowest point of support inside of triggers, guys. That's the key word, in the retracement zone. Because once you get below the retracement zone, once you get past those areas inside of it, your advantage is gone. Your edge is gone. Rule number 3 is no longer in play. Once you get to the wrong side of the triggers, you don't know if or when that market may continue up. This is advantage lost. Rule number 3 not met. But because you have two clearly defined areas, because you know where the retracement's most likely to occur, you can say to yourself, the market's most likely to bounce somewhere from the high point to the low point inside of triggers, but because of the large chart advantages, I choose to enter 2 ticks above the highest point of support. I have so much momentum on the large chart, I don't want to miss this move if the small crowd can't push to the 1-to-1s. That's where your order is placed. In a downtrend, everything says down on the large chart, the momentum is strong, the path is clear, life is good, and you're going to turn your attention to a smaller, faster chart, and you're going to wait for the reversal bar. And the reversal bar signals the beginning of the pullback. The reversal bar is not your entry. But once that reversal bar prints, and honestly, with a little bit of study, you're going to start looking for it before it ever does. You're going to say those up bars are most likely to go up all the way to the top line of those triggers. That's my retracement zone. And you're going to remind yourself that trigger lines are not your entry. You're looking for fibs, midbands, and yellow 1-to-1s inside of triggers. One line, guys. There is one area inside of triggers. It's a midband. You're going to activate a limit order 2 ticks below it. And you're going to say to yourself, this is where the market is most likely to bounce. This is where the small crowd is most likely to fail. If they push beyond here, I don't want that trade. That's advantage gone. Any of these lines up here aren't a part of the entry equation. They don't fit into the window of opportunity. These are where the market should not go. And with a little bit of study and a little bit of repetition and understanding where the market's most likely to continue, you have defined where the market should not go. That's going to be your initial stop, where the market should not go. How many times can I say that? Generally, it's 4 to 5 ticks above all the trigger lines, guys. So you're going to say, this is where the market is most likely to continue. I see it coming up against the overall trend. This is where I'm going to enter. And if they push 4 to 5 ticks beyond those triggers, I choose to no longer be in this trade. The advantage of rule number 3 is no longer in place. I'm willing to accept the loss. And I'm going to remind you guys, anything that wins 20 to 30% of the time is mathematically obligated to lose. Wins 70 to 80 is obligated to lose 20 to 30% of the time. That's a cost of doing business. But when you go and study these guys, when you start to circle tails, and this is what Jen did, and this is what I did the other day. I took a lashing for it. Maybe that's why I'm wound up today. If you go back on a large chart, and guys, this is a historical study. Let me open up. Okay, this is the S&P. This is a historical study. I'm going back historically, and I'm saying, where did I have momentum? Small's outside of the large. Where did I have a clear path? If my rules are met on a large chart, whether it is the potential to break, whether it's a clear path, I can circle the tail, guys. I can go back, and I can just put a circle right around the tail. This is pattern recognition. If I go to the small chart and I scroll backwards, I'm going to see where that circle lines up. We're almost there. And here it is. And you can see potential. It wasn't a clear path till later. The first pullback is right to an area inside of triggers. The second pullback is right to an area inside of triggers. The third pullback is right to an area inside of triggers. And then when 3 divergences print, ladies and gentlemen, it pushes beyond the triggers. Do you guys see it? So you might say, this could have been an opportunity for me. There may have been opportunity here. The opportunity seems to be going away, but the rules are still met, and now there's a termination condition. I choose not to take the trade, and sure enough, it pushes lower. It does go back up, but guys, look at the dance that it does when the momentum starts to wane. So let's see if we can find the perfect example. It's typically a little harder to find them overnight. All right. Guys, remember, this is study. This is all this is. This is study. These may or may not fit your plan. So I'm going to ask real quick, does everybody see? And I'm going to go like this. This is the bar that you would be looking at. Does everybody see odds favorable momentum? That's the most important thing. That's rule number 1. We want to make sure that you guys can recognize a market where the odds are favorable for it to push in the direction of the trend. Everybody good with that? Sure thing. And then from there, we address path. What is our path? Well, my small triggers have made it above the fib. My large triggers are still below, but because of this momentum, this area has the potential to break. Guys, all I'm doing here is we are identifying. I'm going to take the synthetics off because I want you guys focused on patterns right now. We are identifying that the market is in fact strong, that it does in fact have the potential to break the area. Let me get that to come back up. And then we're going to come over here and we're going to look at a small chart. And we're going to see if the entry pattern is true. That's it. We're just going to see if the entry pattern is true. So odds favorable to momentum, potential to break the divergence high. Is everybody with me on this? It's going to look like that in the moment. And you're going to say to yourself, this market is screaming up. It looks good. Life is good. My small chart's going up. Let's go define an entry, guys. And we're just going to go through the process of using the language. When everything is right on the large chart, on the small chart, it's moving up. I'm going to wait for a reversal bar. At the time of the reversal bar, I'm going to say to myself, this market may retrace somewhere from the top of those lines to the bottom of those lines. Do you guys see how because the large and synthetic are split, the range is bigger. And what does that mean for you? That means a little extra risk on a trade like this. So make sure that your large chart is perfect. I'm going to refine that big box of where it may retrace to areas inside that retracement zone. So now the box gets considerably smaller. The market is most likely to bounce somewhere from this Fibonacci support to these yellow 1-to-1s. And it could be Fibonacci support. It could be a midband. It could be yellow 1-to-1s. Hell, guys, I have absolutely no idea which one it's going to be. My job is to right-click on this chart and to put a limit order a tick or two above the highest point of support. Is everybody with me so far? New users? We're just talking about the pattern. Reversal bar starts, define the retracement zone, define where it's most likely to bounce. This market does in fact come down, hits our order, you're in a long trade. And it continues down and you begin to get nervous, but it's still in that window of opportunity. It's still where the market is most likely to continue. And it continues down. And now you're sweating and you want to exit this trade, but you're still in the retracement zone, guys. You're still where the market is most likely to bounce and continue with the trend because of the large chart. And they wanted the low one. They wanted the lower zone. But now you have a reversal bar in the direction of your trend. Now it's going up with all of this great stuff. And I'll be darned, it continues up right to Fibonacci resistance. Ladies and gentlemen, this is your pattern. You can study this pattern by putting a circle around the tail on the large chart and seeing if it does in fact pull back to an area inside of triggers on the small chart. Did anyone notice that there were 3 divergences in the same price range? 1, 2, 3 divergences. For a lot of you, this isn't your trade. For a lot of you, you're going to say, whoa, that's a termination condition. I choose not to take this trade. There are some of you in this room that say, with this level of momentum, I'll still take this trade because momentum is hard to stop. So you're going to see in this room as we get into the second half, some people rock star this trade and make a lot of money. And some people say, but that doesn't fit my rules. How am I ever going to get paid if you make me only take high probability trend trades? Guys, I don't make you take anything. I show you how to read your indicators so you can find opportunity. So let's go through. This is a very similar look. The momentum is up. The potential is there to break. Let's see what it looks like on a smaller, faster chart. Wow, look at the gap between that. 90% of my day is waiting. Let's do it again. I know you guys aren't playing along and I don't care. I'll do this for me. Odds favorable momentum and the potential to break. My large chart says go look for an entry. My large chart says, hey, go look for an entry. Let's address something that we talked about yesterday. Let's say, hypothetically, we're going to create a fib here. That I have Fibonacci resistance right here. I've got momentum, the potential to break, and I haven't reached Fibonacci resistance. And one of the things that a lot of people do as brand new users is they say, dag nabbit, I don't have any room to make money. And we talked about this yesterday. So David, I'm readdressing it. I hope you saw it. Has anyone done that other than me? There's not room to make money, not to that fib. It's like a point, Mark. That's like $50. Why would I risk? Hey, good morning, Gino. Good to see you in here. Watch how rule number 3 helps alleviate that problem. So everything says up here, I haven't reached resistance. I have the potential to break. My job is to wait for a reversal bar on the smaller, faster chart. So up it goes. It's going without me. Oh no, I'm never going to get paid. This is no good. I can't stand this. And boom, there's the reversal bar. And the reversal bar signals the beginning of the pullback. Pete, I did too. That's why I think incorporating this lesson in is so important. So does everybody see? There's my reversal bar. The beginning of the pullback. But let's do this. Where is the market most likely to retrace? Somewhere between, let me change the color on this. somewhere between the top of the triggers and the bottom of the triggers. Is everybody cool with that? We're defining the retracement zone. We're not defining our entry spot yet. Did it work, Jared? Voila. That's what I love to hear. Guys, feedback really does help. It saved my life as I almost quit this software until I started accepting feedback and studying a little bit. Your job is to say, hey, look, let me get in just above the highest point of support and we'll see what happens, right? It's either going to win, it's either going to lose. And guys, it comes down and it hits your order and you're in. And here's the cool thing, is that little bit of room to the fib is now all of that room to the fib. And it pushes down a little beyond your order, and it pushes down a little beyond support, and it pushes down and it's still in the zone, and then there it goes, off in the direction of the trade. Pretty cool. So by trading pullbacks, by accepting that you can make money from the areas inside of triggers, you increase the distance to your profit targets. Because when these are favorable triggers, when the retracement is such a small area, your risk, I'll just move that fib, goes down dramatically from your great entries. Does that make sense, everybody? I love the bar by bars. Here's the cool thing. You can do this historically. Guys, you can go back and you can circle every tail when the rules are met. So here's a question. I don't have odds favorable momentum. Do you see it? The smalls are below the large. The background is red. This isn't one of my tails to circle. Price traded directly into the mid band. The momentum is down. I'm not circling this tail. The tail that I'm looking for is when everything is going down. Guys, we buy high. Circle the tail at the top. When everything is going up, let's see if we can find one with momentum. Or we sell high. We buy low. Circle the tail that's at the bottom. Does that make sense? Everything is up. This is your retracement. Everything is down. This is your retracement. Everything is up, down, up, down, up, down, up, down. This is your retracement. So, guys, this is an amazing study tool. And it does a couple things for you. The first thing it does is every day, if you choose to, and you can open up your large chart. And I'm going to get rid of all my circles. And I'm actually going to go to crude oil because it loads faster. But every day, if you're a crude oil trader, you can open up your chart and you can say to yourself, I'm just going to look for the opportunity. I'm going to see where there was a chance. And there's different ways you may do it. You might say the only look I will ever circle a tail on is if I have strong triggers and nothing in the way. And maybe that's your tail, right? And then as you grow with the software, you might say, well, with the smalls beginning to break out, with one trigger line out and everything up in a clear path, I'm willing to circle that tail. And then you grow with the software and you're like, okay, this one had a clear path and strong triggers. That's the easy trade. But because I'm growing my plan, let's see what this one looked like with the potential to break. Let's see what this one looked like with the potential to break. And when you do that, you do a couple things. One, you can spot the easy ones. You can spot the ones that may have been a little more difficult. You can spot the ones that only had potential. But I think most importantly is look at the gap between the circles. Look at the time it takes to get back to the best of the best. Look at the time, and let's get rid of the maybes, right? So if all you're looking at is perfect separation and nothing in the way, you had one right here, right at about 850, odds favorable, clear path, nothing in the way, circle a tail, and then you had to wait 4 hours for odds favorable, clear path. So if you're a brand new, I am hell-bent on being a high probability trend trader, you had a 4-hour wait. Does that make sense? And then you start to grow with the software. And then you start to say, I've seen this. It's beginning to accelerate. This may be an opportunity. I've seen this. It has the potential to break. Maybe there's an opportunity. I've seen this. Maybe there's an opportunity. And what you get is as you grow with the software, it begins to open doors. As you grow with the software, you can say to yourself, these are my advantages. This is my disadvantage. This is what I see that's great. This is what I see that's creating problems. And that's why for you brand new users, every time you think you're looking for a trade, discuss these three things. Know what you're getting into. Know what the edge is. Know what's missing so you know whether or not you have to manage it assertively as you grow with a trader. So that's my first hour. My first hour is the same hour every day, guys. And my first hour is designed for the brand new user, for the oh my gosh, I just started with Nexgen user. So for my first hour, it's pretty conservative. And I'm going to give you everything that you need to go next level, guys. And this is the first thing. Chart reading 101. The goal is that you learn to look at that large chart, to go to the large chart first, to identify both momentum and path. This is the core, guys. This is the foundation. This is the two advantages that open every door you could ever hope for. So go take 25 pictures each of strong triggers so you know exactly what it looks like, and of weak triggers so you know what it looks like when the advantage is gone. Take pictures of a clear path. Take a picture of a termination condition. Guys, this is very black and white. This is very focused on getting the new user to be able to recognize those advantages so the new user can eventually work beyond them, use their chart reading to find more opportunities. Guys, take these pictures, post them in your spreadsheet under the basic rules. But don't just post them, annotate them. Take the time to write on the chart. I clicked on one that said weak triggers. So weak triggers is defined as smalls inside of the large. There's a loss of momentum. Anything can happen. So now I know exactly what it looks like, and I know exactly what that look means to me. There's a connection that's created between the eyes and brains. Weak triggers, smalls inside of large, loss of momentum, anything can happen. Bonus points if you say, holy crap, the market reversed with weak triggers. That makes it hard to trade. So guys, go through and learn these very core things. As you do it, I'm going to give you this. This is just going to help you take the right pictures, guys. So this is the high probability trend trade checklist. This is the best of the best. This is if you had to define one trade that gives all the advantages, that makes life feel happy getting into the trade, this is it. And the checklist starts with, is the market coming from a strong top or bottom? It's not mandatory. Guys, this is not one of the three rules. But if a termination condition, price reaches an area, triggers don't break, reverses the market, makes the triggers go from green to red. Guys, this strong top is the precursor to the highest probability trend trade you could take. This termination that reverses the market, this strong bottom, is the precursor to the highest probability trend trade you could take. It's not mandatory. You can find great trades without a strong top or bottom. But when you have it, it makes it a little better. Your checklist asks you if you have strong triggers on both charts. You only need it on the large chart to take a high probability trend trade. But if you see it on a small chart too, once again, warm fuzzies, the best of the best way. Strong triggers is always strong triggers. Weak triggers is always weak triggers. And then once again, ladies and gentlemen, when you know the difference between the two, you'll begin to find opportunities in the transition period. You'll begin to find opportunities by using your ability to speak in terms of advantages to say, hey, the momentum is slowing, but the path is clear and I have the perfect entry. Let me look for an opportunity to capture that trade. It asks about termination conditions. Is one present? Well, a termination is always a termination. Price reaches an area and the triggers haven't broken. This is the wait for the reaction point. And if you see this, the rules aren't met. It turns into the potential to break. And if all you're focused on is high probability trend trades, Your rules still aren't met, but that's the second trade on the plan I'm going to give you. Your rules are met when both small triggers and large triggers have cleared trouble and haven't hit the next area. And then finally, defining your entry, guys. It goes through each step on where to find it. So this checklist is the best of the best, guys. This checklist is going to feel like a ball and chain on a lot of you because you're going to say to yourself, Mark, I had to wait 3 hours for this to happen. I had to wait 4 hours for this to happen. I had to wait 12 minutes for the next trade to show up. A gentleman in the room showed me one of these trades that fit this checklist, and it was the easiest winner that he has probably ever taken. And he posted in the room and he said, man, I wish they were all this easy. Guys, the only reason they can't all be this easy, if you choose not to wait for them to all be this easy, that's on you. So print this out, police yourself, guys. Get in the habit of writing these rules on the chart. Talk about where it's coming from, even if it's not mandatory, because you're going to use that for other trades. Talk about the momentum, even if it's second nature. Talk about the terminations. Talk about your entry, guys. Vandalize your charts. The more information you put on there, the easier it becomes because you're writing a recipe for success. So you're going to get that as well. And that checklist takes you to the KISS plan, guys. And this is a stepping stone in your learning journey. This is designed to optimize your chances of success. This is the best of the best, guys. And it's designed to optimize your chances of success as you learn to read your indicators, as you get to the point to where you can write your own plan. So through simulation, you got to practice. Through study, you got to go back and learn the patterns. Through class feedback, if you really want to move forward, guys, let's identify what you're doing wrong and get a path to fix it. And with continuous practice. This is $1 million a year endeavor, guys. You're going to have to put some work in, but you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. All of you are going to build this outstanding foundation. Don't harness yourself to the high probability trend trade. There's too many opportunities out there. You just got to learn to read your indicators to see them, to be able to manage them. So no matter what kind of trades you're taking, guys, you have to know why you're going to enter. And by defining what kind of trade you're in, you know the advantages that it takes to get in. And you will have studied it, and you will have taken pictures of that pattern. And you will have proven that it wins more than it loses. And anytime you prove something wins more than it loses, you also prove that it loses. And when you know a trade may lose, no matter how great the pattern is, it takes a lot of the emotion off, guys. We all take losers. I am so convinced that the pattern is amazing. I'm so bought into the idea that great trades will still lose that I take those trades when you post them in the room and we say, look at the momentum and look at the path and look at the perfect entry. And sometimes they lose. And I don't know why that one, I thought that was a loser. That wasn't. That was a perfect high probability trend trade. Here we go. Same person, same look, other direction. This one didn't work. And high probability trend trade. There was a strong top. There was odds favorable momentum. There was a clear path. There was a perfectly defined entry inside of those triggers. And the stop made sense. And guys, when this was posted in the room, I said I would take this loser with you 100% of the time. And people in the room started saying, hell yeah, that is the perfect loser. But what happens, guys, is if you take this loser and just sit on the loser and stew, you begin to question. Maybe it didn't have the momentum that I thought. Maybe there's something about the midband being over that fib that creates a problem. Maybe that strong top wasn't enough to push it. And you will second guess and beat yourself up over losses, guys. Go through your checklist. It had odds favorable. The path was clear. The entry was perfect. The stop made sense. Losses are a normal part of a positive equity curve. And I'm going to praise you 100% and say, wow, what a great trade. What an awesome loser to take. It's just a pattern. So know what you're getting into. Know that it will lose. It's going to help remove emotion. And then exiting a trade. Why do we exit a trade? Guys, there's a million reasons to exit a trade, and it usually revolves around advantages. But initially, you're going to exit a trade either at a profit target, at maybe an area off in the distance, or just at a predetermined target. You might say, I want to make $100 on every trade and have a $100 profit target. That's your exit. Why would you get out of it? Because the advantages are gone. This is why I talk about naming your trades. If I'm in a high probability trend trade, I know that I have strong triggers, no termination conditions in an area inside of favorable large triggers. If during the course of the trade, if I take my entry and my strong triggers go away on that large chart, I might choose to take an exit because I don't have the momentum to push the market anymore. If I reach an area that's a termination condition, if I get 3 divergences, my advantage is gone. I'm okay exiting that trade, guys. Not every trade is a home run, and a lot of times you'll see that on trades that fail with the perfect entry, there's still the opportunity to make a little money and manage out. But you have to know how to manage. That's the second piece of the puzzle. You have already managed your risk by having momentum. You've managed your risk through no terminations. You've managed your risk by taking the right entries. So this KISS plan is designed to help you do two things. It's designed to help you understand stop placement because you've got to recognize where the market shouldn't go. And it's also focused on getting you paid. One of the things about new users is we all have this all or nothing mentality. I either need to make $700 every trade or I'm going to give it all back because to hell with them. If they don't give me my profits, I don't want any of it. Guys, the goal of trading is to get paid, to find a way that suits you, to find a way that speaks to you to put more money in the account than you let fall out. So you will create your own management plan based on your experience reading the indicators. Once again, I'm not harnessing you to anything. I'm giving you the best of the best way to help remove some emotions. Your management plan is 2 contracts and it's 100% if then. If I enter the market where the market is most likely to continue, if my entry is 2 ticks below resistance inside of triggers, then the initial stop is 4 to 5 ticks beyond the triggers. Guys, my entry, this is crude oil, is 71.34. 2 ticks below the mid band inside of triggers. And my stop is 71.49. This is $150 of risk per contract. This is a $300 risk trade. And the thing is you know where the market shouldn't go, and you know your risk before you ever enter the trade. This doesn't surprise you getting into the market. You know where the stop belongs. And if you try to be clever and say, you know what, I only want to give it $50 worth of risk, that's all I'm comfortable losing, that market is likely to come up, smack your stop, and drop. If you say, oh yeah, I've been burned on that one a few times, I'll just put it right on the other side of resistance inside of triggers. Guys, there is no reason that market can't go right up to the top of the retracement zone, stop you out, and then continue down. This stop is that they're going to have to break through everything good to get me stop. If you don't accept the risk, it's okay to not take the trade. That's up to you. Targets are predefined at $100 and $200. That's it. Has nothing to do with Fibonacci. These are just pulled out of my backside numbers, $100 and $200. Why? Because we're learning to get paid. So I've got my entry, my stop's in the right spot, my targets are in the right spot, and if they don't stop me out, it means that I'm getting a reversal bar. So this reversal bar, we're calling it a confirmation bar because this reversal bar confirms that the market is going down with trend, with momentum, with clear path from the area where it's most likely to go down. If it's not confirming all of the rules are met, it's just a reversal bar. But when it prints from my entry, I'm going to redefine where the market shouldn't go because all the good stuff is happening and they're already headed towards my targets. And if they get 2 ticks above that reversal bar, I'm going to choose not to be in this trade anymore. I'm tightening my risk. I'm getting it off of the table so that I feel more comfortable holding this trade. And now I'm either going to get stopped out for a small loss or it's going to hit my first target. If it hits your first target at $100, guys, one of your 2 contracts is automatically removed. That $100 goes into your account. They can't take it back. It's gone. It's off the table, no matter what happens next. And with 1 contract remaining, you will move your stop to break even. You will protect your investment. You have money in the bank. There are a lot of traders I know, I have worked with, that still take $100 on their first contract because they realize the goal of trading isn't to hit home runs when you're at bat, but to get on base over and over and over and watch the account grow. The worst case scenario at this point is that you make $100 and have to wait for the next trade if they come get you break even. But this break even stop, that was your mantra today. Get paid, Gino. I love it. I love it. I traded gold last night a little bit and just took $110 pops. Boom, 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 boom. And it's so easy because it's just not a lot of distance. And when you've got all those advantages, wow, it tends to go. Guys, your break even stop is not where the market should not go. Took two trades up 900. Gino, that's a day, brother. That's a good day. Like you could stop right now and go play golf. And you could say, all right, greens fees are covered and half my car note. This break even stop, it's half a day. Everybody's got different goals, right? This break even stop, guys, it gives you the courage to hold for the second target, to believe in the odds favorable momentum on the large chart, to believe in the clear path on the large chart. And they're either going to stop you out break even, that's not a horrible thing, you already got paid, or they're going to go to your second target. Your second target is only $200 away, which means that if it hits it, guys, it is a $300 trade. Now let me show you something that's going to happen. You're going to get into this trade and you're going to exit at $300, that little snippet, the perfect trade, and you're going to watch it run another 500. And you're going to say, damn it, Mark cost me money. Dag nabbit, Mark cost me money. I can't believe Mark told me to get out here. Guys, Mark didn't tell you anything. Mark gave you a plan that says learn how to get paid. And from that plan, you'll grow to bigger and better moves. Check it out. When to hold. When does it make sense to hold? Well, this person got out, made their money. When the large chart has odds favorable momentum, when there's all that distance to the next problem spot, you're going to learn how to hold for bigger moves. But until you can recognize this and trust it, getting paid is a pretty good option. There's a lot of ideas of when you can hold for bigger moves. This was a great one. Was it? Everything is perfect entry, right? Pull back to the area inside of triggers. Out at trouble. And guys, look at the momentum going in. I had someone send me a message yesterday. Hey, Mark, I'm thinking about letting runners run. I'm thinking about letting one contract run. And when he did it, he had really weak triggers at an area. He goes, what do you think? And I said, this isn't my let it run look. This is my let it run look. This is my let it run look. This is where I'll take a chance. So guys, you're going to grow outside of small profits and learn how to take bigger profits. And here comes that saying, it's going to be a byproduct of your ability to read indicators, to recognize things in the moment. So where were we? That was the KISS plan. That was the KISS plan management. Also in this file that I'm going to give you is a little something on just pictures that you can take as you go through. Pre-trade, during the trade, after the trade, no trade. Annotate them, put them in the room. The third and fourth are the best ones to get feedback. You're going to get this one. That trade that we fictitiously took, historically going through it, was a $300 trade. That's it. $300 out of the market. That was 3 to 4 minutes of your day. That wasn't your whole day. Gino, it's 10:23 a.m. Gino says he's up $900. That's half his goal. So Gino's looking to make $500,000 a year, right? He wants to make $1,800 a day. It's a $500,000 a year. Guys, if you stop at 300, that's 75 grand a year. And if you're not already making 75 grand a year with your trading, why not learn how to do that and then learn how to grow more? That's up to you. But it is consistent profits that pay dividends. It's consistently making money every day, taking the best trades, being willing to avoid the other trades. There was a gentleman in this room that posted last year. He was able, there you go. I like that, Gino. Last year, there was a gentleman in this room that never took a trade more than 11 ticks, $110 or $112.50. and he was able to collect $167,000 for the year, which means that he was making somewhere between $600 and $700 a day, never taking a profit bigger than $110. Base hits pay bills, guys. Your account doesn't know if the $500 was from one trade or 5 trades. Your account doesn't know if you made $1,000 at once or if it took 10 shots to get there. Until we deploy Operation 10 on the copier, we're about to get a big flush to the downside. I don't know what that means. I don't even know what market you're trading, Gino. But I would encourage all of you in the room, please don't call shots in the room. Don't make anybody that's brand new think you have the keys to the kingdom. I don't want anyone taking trades based on it. Don't listen to Gino. And Gino, you're not the first person I've had to say that to. And I even have to go after myself sometimes. So you could say it's likely to and show me a picture why. Because we have a termination, because the trigger's rolled, because there's 3 divergences, we're likely to get a big push to the down. That's what my indicators say. That's what we're going to focus on. So guys, inside of this zip file I'm about to drop in the room for you is everything that I've given you in the first part of this classroom. It is the 3 rules broken down, how to study them. Inside of that zip file, you've got a plan, proven to win more than it loses. You've got pictures to look at, a checklist to follow. You've got reminders that you don't have to make all the money to make money. You've got the ability to look at all the pictures, to take all the pictures, to annotate all the pictures, to help you understand the edge. There's even the PowerPoint that I used to teach, and everything that we have discussed, including the whys, start to finish in a 2-page document if you need simplicity. So that's my first hour, and this is what I do every hour. My first hour addresses the brand new user that's trying to take it all in. My first hour addresses the highest probability way to use the software. As we get into the second hour, things are going to change for you guys. As we get into the second hour, we're going to look at everybody's charts. And when we look at everybody's charts, you're going to realize that they're not all high probability trend trades. I'm not the trade police. My job is to point out the good and the bad. That's it. Point out the good and the bad. Do with it what you will. The key to everything that we do, and guys, this was written in response to somebody that sent me a nasty email about you guys not taking high probability trend trades in this room. When I was a personal trainer, I told every client I had when I hired them or when they hired me, I said, my goal is that you fire me one day. My goal is that you get so good at this that you don't need me anymore. Until you get to that point, I'm here for you. So as we go into the second hour, realize that a lot of the trades posted in this room, these people don't need me anymore. They found their plan. They did their study. They got their reps. They have the experience. And now they're really using the potential of the software. So build a foundation, understand the basics, get a little bit better each week. So for you brand new users, I blanket you with very conservative rules. Recognition of advantages, a solid plan that optimizes the chances of success as you learn to read your indicators. You're not obligated to follow that. You can do whatever you want, but I'm laying it out there if you choose to use it. So for you new users, a lot of you believe that trading and that terminations are 100% bad, that no momentum is detrimental to your success 100%, and that no areas inside of triggers, you might as well shoot yourself in the foot, guys. And these blanket rules increase your likelihood of success as a brand new user. These are the confidence builders. But as you grow with the software, you realize that there are exceptions to be made, that there's more opportunity outside of the very basics. The more time you spend with it, the more you'll see. So initially, learn the process that yields the results, guys. Find a way to get paid so that you can find a way to get paid more. That's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, but rather the best trades, you can find an extraordinary level of success. I've been watching it forever, and the further new users deviate from simple, before they learn the basics, guys, the longer it tends to take them to learn the basics, those things that create advantages. So keep questioning everything. I encourage it. I want you to learn. Guys, give yourself a little bit of grace. You're brand new. Don't create these ridiculous expectations that by the end of your first week you'll be making millions. Guys, we're in a constant state of study and a constant state of refinement. And while there is a way to find opportunity, most of you are going to find yourselves bored and hate waiting. And you're going to break rules and you're going to have challenges. We all do it. Post those challenges in the room. We'll talk about it. And I'll tell you, without hesitation, that when you go back and if you really put the time in to study these trades, if you really put the time in to study these patterns, what happens is you find a way. You find a way to catch more, to do more, to see more. And that's the goal. No sound? You probably muted me because I'm preachy. Can you guys hear me? Give me a Y if you can hear me. Is it me or is it Ron? Shoot dang. Hold on one second. Let's see what I can do. 1 second. Well, nobody can hear me saying that except the YouTube people. So let's see if we can get it back. Dun, dun, dun. Listen in. Did that work, guys? Did that little reboot get us back? Can you guys hear me now? Give me a Y if you can hear me. Anybody? Nobody? All right, YouTubers, it happened again. So we're going to work through it real quick, and I'm going to open Discord back up, and I killed the room, and we are going to get back in, and we're going to start things up. We're going to see what we can get done here. Let's start the stage back. And we are up, and hopefully you guys can hear me now. Do we have audio? We're good? Cool. All right, guys. I will be back in a few minutes. This is where we're going to look at all the charts, guys. This is where we're going to talk about advantages. This is where you're going to get feedback. So I'll be back in just a few minutes. When I come back, we're just going to click and look, guys. Click and talk and see what we can do. See what you guys can pull off. That's a pretty cool termination condition, isn't it? Did anybody go short from the mid band, make a little money, and then get out when it changed? Some of you might have. It's not high probability. I'll be back in 5 minutes. All right, guys, as we get back into this and we talk, I do want to mention one thing, and please um, understand understand that this KISS plan, whoops, that changed, didn't it? Should probably exit. We reached termination. This KISS plan is designed to optimize your chances of success. So when we talk about the high probability trend trade, guys, we're designing something to optimize your chances of success. This is a plan that is the best of the best. This is a plan that's the easiest to learn. This is the plan with the most advantages. This is the entry with the best of the best entry. This is the management with the most pragmatic approach. This is not the only way to take a trend trade. The 50-50 trade, that potential to break trade in this plan. Again, the 50-50 plan, as laid out in the KISS plan, is the best of the best way I could ever figure out through hundreds of pictures to take the 50-50 trade. It is not the only way. You'll see people take it with 1 divergence, 2 divergence. Hell, you'll still see people get into the market with 3 divergences. That is their growth from it. So if you're holding yourself accountable to this plan, let me know. If you post trades that are outside of this plan, I'm still going to celebrate the hell out of them when they're great reads. So let's go up to the very top of the room and let's see what we have. All right, Joel got us going late last night. Let's see what Joel did. Joel said, check it out, Mark. From a strong top or bottom, this is a 50-50 trade. He said, yeah. He said, this was a termination that reversed the market. Mark, I know that to be a strong bottom. Great stuff. No sound. Seriously, can anybody hear me? Erg. Hold on, guys. This is just crazy. Education, start the stage, start the stage. Let's see if we can do this quicker. Did that work? Do we have audio? Man, I don't know what's going on with Discord, guys. I apologize sincerely. I know that's frustrating. It's frustrating for me to see all my students get knocked out of this room. I know there's people that want to be here. I know there's people that want to learn, but that's a killer for some people. So my apologies. My apologies. Um, Joel says, I'm coming from a strong bottom, and it marks yes on his checklist. And he says, odds favorable momentum on the 13-2, and absolutely. And he says, smalls outside of the large on 5-1. He says, yeah, I've got a line out. I know there's some momentum there. Oh, no, here it is, right here. He goes, I like that. And then his checklist says no divergence on the 5-1. And Joel says, you know what? I recognize it. And I know that this isn't the optimization of the trade, but because of the strong bottom, because of the momentum, because of the advantages, I'm going to take this trade. And he took it from an area not inside of triggers. He willingly let go of a couple of his advantages based on momentum, based on a strong bottom. Turned out to be a great trade. Is it a high probability trend trade? It's not. Could Joel have been absolutely run over? He could have. But Joel made a decision based on his chart reading to enter this trade. And Joel, you took it, you got paid, you got out of trouble. Nice trade. Guys, when you understand what you're up against, when you start talking to yourself in terms of advantages, when you start to recognize disadvantages, what happens is you kind of know how to react. You kind of know how to manage. Do I need to be aggressive? Do I need to be less than aggressive? Do I need to let it run a little bit because of all the good stuff? Joel, there's that strong bottom. And now this trade, let me figure out where it's at. 824, 824. So we're right here. And you don't have the momentum, but you actually do have the small and large. It looks like are above. It's hard to tell. Um, your entry's at an area inside of triggers. And this is really not, I don't know that this even qualifies as a trend trade. This is more of a little, man, we've started to get above support. When it snaps back, I'm going to hope that support holds. And it did. And it worked out for you. And then it's hard to tell. 5 pullbacks all over the place. So we're working backwards a little bit. So at 641, we had odds favorable momentum. We had the potential to break. It's coming from a strong bottom. He takes the pullback. There's his first trade. Pulls back to a mid-band. Goes up. Hits the termination. Pulls back to a mid-band. Doesn't trade into the termination condition. Trades above it when the triggers start to break. Pretty cool, Joel. Going with trend. Going with direction. It works out. All right, Miss Jen. 1, 2, 3, 4, 5, 6. I love this. So yesterday I posted in the room, go back and circle some tails. See how it works. Look for potential. Build a little patience. Jen did it. 1, 2, 3, 4, 5, 6. And we're going to go through. And Jen didn't take any of these trades. What Jen did is she said, hey, this looks like my rules being met. Let me circle the tail. Let me see if my rules in fact were. And here she says odds favorable, clear path, perfect entry, $300 for the KISS plan. Pretty awesome. Did you really lose sound again? Son of a gun. All right, did the little reboot help? Did that work? I'm talking. Can you hear me? You probably can't hear me. YouTube, my apologies, guys. What do you think? Did that do it? Did we get there? Guys, I'm so sorry. I don't know what's going on. And I know that's frustrating. I know that's frustrating for you guys. I have no idea why this is happening. It's clearly not a microphone problem because all I have to do is reboot Discord and then it's golden. Um, I'm going to do a lot of research this afternoon and figure that out. So Jen, great study. Historical, fits your rules perfect. And she says, okay, this was a $300 opportunity for me. She's probably writing it down on a piece of paper. Let's see what the day presented. Maybe that's it, 10K. It's trying to get out of here early. I might, Ron. I may do that. So Jen says this was $300 potential. Jen, did you catch this trade? I know you went back and checked it out. Did you catch this trade live during the day and make $300 on it? And feel free to tell me no for the sake of a... Oh, no worries. I'm sorry, I didn't start video. I thought I did. Hey, let's try this. Golly. It's Friday, guys. We're almost there. So, Jen, When this set up in a live market, did you take it? And feel free to lie for the sake of lessons if you need to. Puts. No, you did not. So when you go through this exercise, guys, part of the exercise is were my rules met? And the answer is yes, right? Without question, 100%, Jen, your rules were met. So when you go back and do this study, guys, if the answer is no, it's not my trade. And then you have to say, why did I not take it? And there's a couple of reasons. First one is I wasn't there. You can't take a trade that you're not in front of the computer for, guys. That's not your trade. Sometimes divergence kept me out. Sometimes second guessed my entry, right? So there is a reason. There's always a reason. And Jen, we're going to say hypothetically that you saw this divergence and you said, whoa, I can't take that trade. And if you did that, taking the kids to school. But if you did that, it opens the door for the lesson, right? So if you didn't take the trade and the rules were met, your study says, okay, this is an opportunity that I'll be able to capitalize on next time. If you weren't there, you're like, oh, well, that's money that I could have made. But if I'm not there, it's not my money. If it's a lesson that you need in the rules, you can go back and check your rules and make sure that you're there. Same thing with second guessing. But this was perfect. And if you're in front of the market and this presents itself again today, my guess is because you have this pattern recognition now, because you've put it in your head one more time that this is the perfect trade, you're more likely to catch it. Next picture. Once again, odds favorable, potential to break. Jen, this is one of those times where the market is accelerating, but it's not separation. You might say, that's not my trade. And then if you see 20 of these pictures with that look, Jen, you may discover that it is your trade. But then you say, but I don't have any areas inside of triggers. Rules not met, even though the tail was circled. I'm going to say there was no potential. Jen's not going to lie to herself and say, well, I could have, I would have, I might have, because maybe she says, I'm outside and I enter with a confirmation bar. I enter with a reversal bar from the area. This looks great. This doesn't. I force it to go. And Jen, you probably still would have lost this trade. That's okay. It didn't fit your core plan. There's absolutely no loss. Maybe in the future, your study creates an opportunity outside of the plan you currently trade. Momentum, potential to break, area inside. If you took the entry at 63.78, you would have made money and got stopped out break even, $100 trade. And you took this one, I believe. Yep. So it looks the same. But Jen, the cool thing is when you took it, your heart was racing. When you took it, you were hoping it would win. When you took it, you may not have noticed everything going on. But if you come back and study it, isn't it easy to discern what's good and bad when the market isn't moving? Isn't it easy to see the advantages, to see the challenges when you don't have an emotional skin in the game? That's why I love this one. That's why I love this drill. Great job again. Can you guys hear me? Give me a Y if you can hear me, please. Oh, please give me Ys. Yes. Okay, thank goodness. Might be you, Paul. Try a reboot. All right, let's go to her next study. Jen, you had the strong top, you had the momentum, and you're almost broken through. Had your entry, stop would have been in the right place, would not have been stopped out. Both targets hit. Beautiful. It's a great trade. So now we're up to 700 potential, right? We're up to 700 potential. I'm keeping score. Odds favorable still. Now it's a clear path. It's a perfect entry. It's $100, third divergence prints. You're out break even. And even though it went down, you don't care. because there. So now we're up to $800 potential based on Jen's plan. And now we go into the last one. It does have the potential to break. No areas inside of triggers, multiple divergences, no money to be made there. So Jen said yesterday there was the potential for $800, right? If I were in front of my computer from start to finish and followed my plan, the potential was there for $800. Obviously, Jen wasn't in front of her computer the whole time. Kids have to go to school, right? So I always tell people, when you do this, what if you caught half? What if you caught half of the potential as a brand new user? What if you caught half of the potential looking for these very solid rules? Would you be unhappy with a $400 day? That's 6 figures a year if you can do it every day. This drill isn't designed to say you should catch everything. This drill is designed to say these were the opportunities. These are the opportunities. And I identified them. Honestly, it's just getting the patterns in head. You know, it's been a while. You're not a slow learner at all. But what you're doing, Jen, is you're reaffirming the pattern that makes it easy to make money, and you're reaffirming the patterns that suggest you should probably just pump the brakes and wait, right? So you're developing trust. It's trust in a pattern. It's trust in a methodology. It's trust in an idea that there will be easy trades. That's not one. There will be easy trades throughout the day, and there will be more difficult looks that maybe you don't want to waste your money on. And if you took this trade at 849, you don't feel bad about not taking this trade at 905 because you just made $300 with the easy one. So Jen, thank you for doing that. Thank you for taking the time to go back and study that. Thank you for posting it in the room and sharing your experience with it. I firmly believe that the people that put the most time into study are the people that typically find the highest level of success as traders. It's so easy to believe that showing up to the game deserves a trophy. And life just doesn't work that way, guys. Study doesn't work that way. You get into something you get out of something what you put into it. So Pete says, check it out. I have a termination that reversed the market. We're going to call that a strong bottom. And while it's not a rule, I love the look. Yeah, the more I study, the luckier I get too. Triggers rolled up, separated, odds favorable, and it's a 50-50 look. Pete has written out his large chart advantages. He says, this is what I see, this is what I have, this is what I'm up against. The potential to break. Pete makes the choice to enter just above the fib. He says, I know decisions are made at fibs. With this level of momentum from a strong bottom, with this level of momentum mirrored on this chart, I'm going to take a shot at riding that momentum. And you see that he gets in. He takes half of his position off at 10 ticks, $100, because he knows that momentum is fleeting, and he exits when the momentum goes away on the reversal bar. Outstanding trade. Does that make sense, everybody? First is large chart. Says, Pete, you're coming from a termination. We are screaming north, but we only have the potential to break. Pete says, well, I'll tell you what. I won't trade directly into that fib. I'll wait till we get to the other side, and I'm going to try to surf that wave of momentum all the way to the beach. Absolutely beautiful use of the software. Beautiful use of advantages and finding your own way to get it done. Nicely done, Pete. Let's see who's next. We've got Paul, and I think we have a couple Paul. No, not yet. Paul says, if I had taken this trade, I could shut it all down today is my day to clean the house. It'd be done early. If, right? So we're going to see what you're looking at. Let me see what trade you were talking about. So right here. I love it. So guys, in 2004, I'm going to show one chart, Paul. I'm going to show one chart. In 2004, Nexgen taught users, if a Fibonacci area stops the market, and the small triggers on that chart roll up, buy the small triggers. That's it. That was the whole rule, the whole trade. If Fibonacci holds and the small triggers turn up on your chart, buy the large triggers, ride the wave. You did it perfect. You took it a little further. You said because of the termination, strong bottom, because of the momentum beginning, because they're pulling back to Fibonacci support, and that Fibonacci support is nestled right inside of trigger lines, this is an opportunity to make money. And it's a beautiful read. And Paul, I wish you would have caught it so that you could go clean the house. I wish you'd catch 2 of them so you could come clean my house. Great job on that one. All right, Bob B. This was an overall loser of $280. Let's see what happened. All right. Strong bottom, pivot stop out, perfect recognition. Odds favorable momentum, without a doubt it is. And then at the time of entry, it's almost a clear path. It's a 50-50. You get into the market just above the area inside of favorable large triggers. It looks like those triggers are hovering right around 20, maybe 23. You get 4 ticks. It stopped out 2 of the 4. Wow. So it's only half. Did you have different stops, Bob, or did it only fill half of them? That is what we call a happy little accident. That is a Bob Ross moment. And then you're able to get it all back on the other one. It only filled half. There you go, Paul. I like that. It's the perfect look. It's the perfect entry. And man, the sellers had it in them to push just a little bit where the market shouldn't go. It only got half of them, and then it did everything that the expectation was. I like the trade. You ended up down 230 on it? Where was your exit? 35? Oh, and that's why. So here's the question, Bob. Why the exit at 35? Oh no, at 33. You close it on the reversal. Okay. So let me give my thought on this and tell me what you think. And we're going to start with all the praise in the world, man, because you did it right. Whoops. Your stop made sense, and they kept you in. They kept half of you in. So I like when I'm talking about managing. So what's the expectation for a high probability trend trade? All the momentum carries it to the next level, right? That's pretty much the expectation. I want you to see what happens here. So you take it perfect, right? And the sellers have a little bit of giddy up in them, and they push it down here. And that's what we see right here. Let's get all this off. They push down to here, and that's exactly what you're seeing right here. You held the trade because you know it's the right look. Small's above the large, even though they've turned red. Everything is above the fibs now, and life is amazing. And Bob, I want you to see what happens. Those small triggers roll, and they start zooming up. And what you get is a little pop right back to those triggers, and that's where it continues up. So this is a look, and I've got a picture for it that I want to share with you. This is a look. There will be times, guys, when trend trades don't work. There will be times when trend trades don't work. It's just a part of it. Sometimes it's 3 divergences in the same price range, right? Sometimes it's a deeper push. As long as your large chart still says go, Bob, one of the things that you're going to notice is when those small triggers roll, very often you get a pop back to them, and every one of your indicators is going up. And this is kind of that, notice that it's right at an area, right at the mid-band. This is kind of that second chance. Things didn't go right. Maybe I got stopped out. Ugh, 3 divergences. Here's the market going back with the large chart, and you see it over here as well. Lower divergences, pushes beyond everything, but the large chart still has it in it. And look how it snaps right back to those large triggers, or small triggers, right in an area. So this is a continuation look, guys. Is it a high probability trend trade entry? Absolutely not. But when you begin to trust that this look is more likely to go up than it's not, Bob, it creates kind of that second opportunity to get in. And you can use it and say, okay, I'm in the trade. It's a good trade. The advantages are there. If they get down here, like below those triggers, below that area, oh, I'll take an exit. Some people will just add those two that fell off back there. Make sense? And that takes a little more study. It's a little more than just basic. But there's opportunities there. And it all is because this looks really nice. You're just finding a way on an entry chart. Great trade. Great trade. And thank you for posting a loser. Guys, losers happen. Losers are going to happen. My promise to you is that if I can think of a way to help you through it, avoid it, around it, or capitalize after it, I'm going to throw it in the room for you, and I'm going to see what we can do. All right, Miss Jen. Just about, but not. Yeah, but Ron, he knows what he's up against. When he sees that, he's telling himself, okay, this isn't perfect. I'll get my guard up, but it sure is close to perfect. I'm willing to take a chance. All right, Miss Jen, strong bottom, odds favorable, clear path, no divergence, 2 areas, perfect stop. I mean, it was perfect, and they got you too because you followed the rules. And then momentum trade re-entry, but had to drive son to school. And that's exactly what we just talked about. And Jen, you identified it, recognized it. And if you didn't have to take the kid to school, you probably would have done well. He needs to take his driver's exam. Keep you in front of the computer. Come on. He has exams. That's awesome. You're a good mama. But Bob, it depends on where you're at in your trading. Jen's at the point where she begins to recognize this. You may have just been introduced to it. Right? So go back and look at that a little bit. When trend trades fail, was there a second chance? There may have been. I love it. You guys are amazing. All right, let's see what's next. And I like more than anything that both of you took the exact same trade and your stops got hit in the exact same spot. To me, that's always pretty awesome when people on different sides of the globe see and react the same way. It means that there's something to this methodology. All right, Paul, we've got 3 of them for you, my friend. First one, not a trade, just an observation. Everything is up. Your 21 has a termination condition. Your your 13-2 has a pullback to support with everything up. I think that's the same trade everyone took. It might have gotten your stop. There's your continuation empty. Entry. Good stuff. All 3 of you seeing the same thing. Any writing? Here we go. Termination. 13-2 stab back. Right at the area inside of favorable large triggers. And sure enough, because of the termination triggers, it's directly into more trouble. But strong bottom wins. Nicely done. And then everything says up with the potential to break. Everything says up. You get above trouble. Everything says up, you get in. Oh, you get in, and then there's that darn fight from the small crowd right back to support. That's frustrating sometimes, right? 1 to 2 entry, 8, middle of nowhere. My rules say take it with a tight stop since it's so near a fib. 3 tick stop, larger stops for better conditions. Fair enough, it fit your plan. Paul, are you in here? Are you still with us? The UK platform stopped you out, not the US. Paul, I want to share one thing, and I'm going to do it on, I don't know if you're even using the 5-1 chart, but I want to share a picture because I think this has proven helpful for a lot of people, and I hope that it proves to be helpful for you. When people just jump into the market, and this would qualify, right? Just getting in because of the strength. Is that a fair assessment? You got in because everything was screaming up and you were hoping it would go to the fib. I want to make sure that I'm in your head the right way. Yeah, nothing wrong with that at all. That's a wonderful thing. I'm going to share one thing with you, Paul, and this is the most outstanding thing for these jump-in trades that I've ever seen, is when you're left of those small triggers, the market will continue up. Once you get to the right side, your advantage of just hoping things flow goes away completely. And you see this a lot. If you go back to, there's a great example. Once I get to the left side of the triggers, life is easy. And then once I get to the wrong side of the triggers, that's where these fluctuations happen. Same thing is true going down here. When I'm left of the triggers, it keeps going down, and it doesn't stop going down until the market gets to the other side of those triggers. So if you guys are one of those folks that are like, hey, I love jumping in with all this momentum, your biggest advantage, Paul, comes from this side of the triggers. And once you get to this side, that's where those retracements are more likely to happen. Everything else, I love it. Your ideology is great. When every chart I own is screaming up, I'm going to try to go up with it. Your smallest, fastest chart will show you when that 3-tick stop is more likely to be hit or when it's less likely to hit. Does that make sense? Good stuff, man. Really good stuff. All right. Ron says stolen base. Let's see what that means. Probably a pirate trade. Counter trend, white bar really shouldn't work trade, not for everybody. So what Ron did is Ron said, check it out. My large chart's going up. My large chart is strong. There's a pattern that tends to happen where the small crowd fights and pushes it back to a mid-band or a fib or a 1-to-1 inside of triggers. Ron said, what I've noticed is that when divergence prints on a small chart, and it happens to be at the day's high, I can usually ride that little push down to where the trend trades come from, the reversal bar marker right here. And then once again, just to compound, do you guys notice how he is left of small triggers that are screaming down? That increases the odds of success. This is a pirate trade, guys. This is counter trend trade. This fights momentum. This fights trend. This trade is a byproduct of Ron's ability to understand the patterns through his study. Great trade, Ron. It used to give me a heart attack watching you guys do this, but when I know that you put the time in, when I know you've been studying, when I know it's based on patterns that you've studied, that you've taken pictures of, that's repeatable, it's pretty awesome to watch you do it. Miss Jen did the same thing. Odds favorable building, recognizing that while it's not there, of course I will. I always will, Ron. While the momentum isn't the best of the best, it's growing. She can see it. The triggers are separating. Everything says up, and then once again, left of the small triggers, easy momentum run to take it up to the targets. Jen, beautiful trade. Beautiful trade. And guys, these are the things that at first you're like, oh, this doesn't make sense. And then they start to make sense. And then you start to capitalize on it. Have you guys ever gone back, Jen, and done the study where you circle the top of the bar on the large chart when it breaks the area and see if you could have made $100 over here? That's fun. That's another circle trick that you guys can do to build confidence. That's how I learned this trade. I'll show you exactly what I mean. So Jen, strong triggers, back of the bar clears. That's where the market's trading, or the bottom of the bar, we could say. The bar clears the fib. That's where the market is trading in the moment, right? Look at it over here, Jen. Cleared trouble. There's your easy $100. You can go back and study that particular trade, the exact same way. Let's see if it works twice. Back of the bar clears, so the market is trading down here. You did have odds favorable. Did you have room to make money? This is how I learned Ron's trade, because Jen, what I did so often when I was trying to learn it, is I would say, okay, It's almost there, right? I have momentum, and I wouldn't let the back of the bar clear, and I would get caught up in these bounces. And it's just letting the market get away from the decision-making zones. And it's probably true over here as well. In a strong trending market where momentum is assumed, that was it. And that one didn't have room. So did you really lose sound again? All right, guys. Shoot. YouTubers are hearing my frustration with this right now. I apologize. And we're back, I hope. And we're back, yep. Jared, I used your terminology. I know. I said back of the bar and you popped into my brain and I was like, say the bottom of the bar, say the bottom of the bar. Um, Man, I'm gonna lose my class if it keeps doing this. And I'm so sorry, especially if you're brand new. I know this is challenging when things aren't doing it. So another way to study, Jen. Um, I don't know if you guys know this, but my job with education is really just to study patterns. My job is to study patterns, and if there's anything I can do to make them easier to recognize, if there's anything I can do to make them more accessible, if there's anything I can do to make these chart reads easier to read, guys, that's all I do, is I do it. Who is this? This was Pete. Pete, um, strong trending market, more than 30 bars. You get above the trouble, you just jump in, and you make money. Nicely done, Pete. Um, People have asked me, how am I going to do the chili dog? How am I going to take that trade with TradingView? And I haven't come up with a good answer yet. It looks like you're onto something. Just strong triggers go, huh? Strong triggers go. Nicely done, Pete. Making stuff happen on 2 different platforms. That's pretty cool. Careful though when you add stuff. Yesterday I took the perfect trend trade. It was kind of comical. And I exited because of a Renko bar chart, and then it just launched without me. I was like, I've got to make decisions. All right, number 3, entry on 13 range with white bar pullback, a bit of prayer, and I'm not sure what ASC is. Did not look at any of their charts. Entered here and held. Awesome. So Paul, this particular trade with the white bar is typically dependent on a termination condition here. That's the best of the best. But what you did is you got your breakout bar and you said, I've got a breakout bar with weak triggers. I've got fibs here. I'm going to go for it. And you did. And look what it did. It went down a little bit and made that HVA and retested that perfect area and then continued down. Nicely done. So for you guys, John Novak did a big class on this white bar trade. There's videos for it. See if I can get this up. My Snagit is dragging. For those of you that have capture software, I read in an email yesterday sent to me that Snagit is going to be available to you guys for a year for free because they're doing away with capture. I thought that was pretty cool. All right, so like everything about it, Paul, I'm going to give 2 things here. White bar says top may hold. If you just jump in, what you're doing is you're anticipating the HVA. Because in order for that HVA line to print, you have to get a down bar after the white bar, and that's where you entered. Jared, I'll find the link to it. And then the more conservative trade, you guys will see this, small triggers are down, and it pulls right back to the HVA. So what you did, Paul, is you anticipated the HVA from the fibs, and you kind of didn't wait for the triggers to roll so much. And then that was the anticipation trade. And then that was the little easier to catch trade. Nothing wrong with this one. If you guys aren't comfortable with this one, that's kind of your second entry right there. And then let me go to videos. Let's see if that comes up. Services training, course overview, educational room. There we go. This is it right here, Jared. Talks about what he was talking about. Good job, Paul. Yeah, and that's just the little easier one, for sure. I love your trade. That white bar trade, especially when it's coming from a termination, and that's the key. When it's coming from a termination condition, I've been known to enter on the white bar and leave my stop above it, anticipating that HVA. And if something changes with the triggers, they get back above it, that's when I start rethinking things. Nicely done. Let me figure out where we're at here. Pete, Paul, Pete. Was that the long? Nope. Okay, let's see what we have. Ron, have a great weekend, man. Have a great weekend. All right, market reversed out of nowhere. Weak top, triggers rolled, odds favorable, 2 terminations to get through. So, Pete, you traded directly into an area, and the large triggers were a full bar away. Guys, when we talk about patterns, when the market hits an area and the large triggers are a full bar away, do you remember when we talked about how price loves to go back to those large triggers? That's a good indication that it's more likely to happen. And that's exactly what it did. It closed the gap and it danced. And then right here is where they're making decisions. It's either going to go down or up. From a bad top, very often it's more likely to go up. Pete, you get in, your stop's in the right spot. This is one of those trades because of the distance. I love a reversal bar. I love a confirmation bar. And you may want to do a little study on that. It gives you a better entry. It gives you established risk right where the market shouldn't go. And it gives you a lot more room to make some money down to that fib. Could have added on, yeah. And understanding that gap theory is what sets you up for the potential entry a little higher. Nice hold, though. Great job allowing the large chart to continue to lead the way from start to finish. That's hard to do. It's so easy to get wrapped up in the little fluctuations on the small chart that very often we'll talk ourselves out of the perfect trade, even though the large chart says, hey, we're going this direction and life is good, and then the small chart talks you out of it. So, all right, number 2. All of your indicators are up, right? So that was your first short, and you got run over. And then your second short on the way down is the one that works. Pretty cool, Paul. Great lesson here, right? If you're just going to jump in, be on the left side of the triggers on the small chart. I think we found how that 5-1 is going to help you a lot. But the small chart's on the wrong side. This chart's directly into a termination condition. This chart has large triggers screaming up with the smalls above it, and nothing on this chart says we're going down yet. So you're hoping everything will break, and see how it just goes from not good, not supporting the short, don't take a short into a termination, not even at the trigger lines yet, and just trickle down economics. It started bad and it just kept getting worse, and it didn't work. And then when everything starts to roll, when it closes that gap on the triggers, when you're coming from areas inside, that's where you find the easy money. Nicely done. Woo, this is screaming. There it is again. Man, we've got the best lesson ever today. Paul, I think we're going to save you a lot of heartache on this jump-in trade. I really do. Just by eliminating entries on the wrong side of the triggers when you jump in, um, that's one that you don't have to take. That's one that you don't have to take. We may have stumbled onto something that just makes Monday a little bit easier for you. Your chart reading is just fine. A little bit of refinement on that entry is going to take some of the headaches off. Quarter's not in here because Discord is going crazy. Odds favorable. It doesn't look like it hit. Well, it looks like it hit the fib, pulls back. All the momentum carries it down. Everything says down, clear path, pulls back to the mid-band, heads down, and eventually goes back up. And quarter, I'm not sure where you're at in the learning process, and I hope you're watching the YouTube video. Momentum and path, find an entry. Momentum and path, find an entry. Great job. Great job. Is that it? Nope, we got quarter again. Oh gosh, I'm gonna have to send quarter some messages that say I'm so sorry. Um, odds favorable and the potential to break. So let's annotate it. I'm gonna email quarter and make sure that he gets this feedback. Odds favorable momentum, potential to break that divergence high. Entry makes sense above midband. Stop is still in retracement zone. And then guys, let's go back and see what crude oil did after that particular setup. Nope. And it went down, huh? There we go. So we have to give that lesson. Whoops. If you were going to take it, that was the perfect entry. No divergence, everything up. That was the perfect entry. As it progressed, you can see momentum gets lost on the small chart. And it typically takes momentum to break areas. So there's a good lesson. The first entry was pretty solid, is great. Time to make a little money. When that loss of momentum happens, that's where the market starts back down. So I'm going to hold on to that one, and I'll message quarter privately. Let's see if it'll let me do it, because I want quarter to have feedback. All right. Sorry guys, I'm doing a little side stuff here. One of the things that I don't ever want to have happen is I don't want you guys to miss out on feedback. I don't want you guys to miss anything. So if I know there's tech issues going on, I'm going to do my best to make sure you still get it. You can always reach out to me and go, hey Mark, I got bumped out of the room. Things didn't work out. Did you see this one? What did you think? And I'll say, okay, let me get that to you. Let me go find it. Let me annotate it. Jen, odds favorable. Back of the price clears. Easy money down to the fib. Base hits $400. It's just hard to argue against that. With momentum and path, find a way. Did I get this one, Pete? No, I did not. So let's take a look. Strong bottom. Odds favorable. You got paid on the first one. I remember that one. Above the fib, you exit with momentum. You get in at the area inside of the triggers. And then when it comes to the lower area, you add on. Absolutely love it. Large chart doesn't really blink. It almost gets you. This one got some people. And then you get paid on the way up. Nice job, Pete. Great trade. I think quite a few people took that trade. Man, it's already 11:30. You guys are killing it. I'm so sorry. Discord's been a challenge today, guys. Javier, I know you're brand new, and you're like, "What the actual heck?" Usually we have solid sound through. For whatever reason, today is a little challenging. We have seen a myriad of trades today. We have seen trades that are based solely on momentum. Guys, we have seen trades that went into termination conditions. We've seen trades where the area only had the potential to break. And that's one of the great things about the software is it's an individual sport. And we all see it differently, right? There's math people, there's science people, there's English people, there's art people. And you're going to find what speaks to you with this software. Some of you, all you want to do is capture that run of momentum. All you want to do is say, you know what? $100 a pop is great because once I learn how to make $100 consistently, I can take that exact same trade with all of those advantages and do it on a 4 lot. And that $100 trade becomes a $400 trade. Does that make sense? It's usually, and I think it was 2 years ago in the main trading room, there was a lot of people, and this was New Year's, and they were coming in and they're like, you know what, this year I'm done looking for more trades. I'm going to take the best trades and I'm going to increase my contracts. And that became a pretty big deal. I would rather have a plan with one trade on it, trading 10 contracts, than a plan with 10 trades on it, trading one contract. Because the more options I give myself to make a mistake, the more likely I am to make a mistake. It's just a part of it. It's just one of those things. You want to do a little test, guys? So Paul, we're left of the triggers, right? And this may be a little premature, but we're coming off a termination. We're left of the small triggers. Let's see if it keeps going up until it closes on the other side. Well, it just closed on the other side. No, it didn't close yet. It didn't close yet. So we're going to see. It closed inside. It didn't close below. It may or may not go up. I mean, the trend is down. The momentum is down, right? But I just want to test that theory. As long as I don't get a bar close on the other side of those triggers, will the market go up? And if it closes on the other side of the triggers, is that the end of the potential up? That's all we're doing. This is science. This is not a trade. I couldn't, for the life of me, come up with a rule for this trade. I just want to see the relationship of price versus triggers. And then on that same token, Paul, you notice that I'm getting to the other side of the small triggers on the large chart. Kind of supports the idea that that push down is struggling. See how we just expanded that very simple lesson into a larger lesson. But until I get a close on the other side of these triggers, it's probably going up. So once we get our first up bar, we're going to chase the reversal bar marker. Because in theory, this market is going to continue up until it closes on the other side of these triggers. Does that make sense? Does this make sense what we're doing, guys? This is not a real trade. I don't have rules for this trade. I'm going counter trend. I'm just trying to see if there's any truth in the idea that being left of these triggers creates an advantage, that being right of these triggers takes that advantage away. And it keeps going, and I'll just keep chasing the reversal bar marker. That's all I'm going to do. Just going to keep chasing it. Who knows how far it's going to go? We'll put that one up a little bit. But I mean, we're already at $50 a contract, $70 a contract, and we haven't closed below yet. This was a fun one. We did this in class once, and I think it went like $700 on a 2 lot before it had a challenge. There's your gap theory. Price returns to the large triggers. So if you were trying to close the gap back to the large triggers, that may be advantageous. Is it going to close below? This is fun for me. And guys, we're through all the pictures. So now we're just trying to learn the micro lessons, the little things that you're going to start to recognize once the big lessons become easy. And this is one of the ones, guys. And this for me was an awesome way to hold for bigger moves on my runner contract. When the large chart said up with strength, on my final contract, I would chase it with a reversal bar, which means that I'm willing to give back about 120 bucks. Sometimes it pays off. Well, you just got paid 100 and you've only got $10 worth of risk. We close the gap to the large triggers, and now the large crowd's going to make decisions. Do the sellers really want to go down with it, or are the buyers going to continue up off of Fibonacci support? We'll know in just a minute. But we're going to keep chasing the reversal bar marker. The worst you could do on that now is 90 bucks. Let's see if it runs. But this is one of those things, like initially I'm taking profits at 100 and 200, and I'm only taking high probability trend trades, and I'm waiting, and I'm bored, and life is agonizing. And then I'm like, wait a minute. I'm starting to notice stuff. I'm starting to notice that when this area holds and those large triggers don't follow, and I get a divergence, and then everything rolls and I get another divergence, well, that's usually a pretty good push, right? And now I know where trouble is because I know price typically closes the gap to the triggers. That's our pattern. So I get paid at the triggers. And now this one, if the large crowd says, you know what, Mark, we really wanted that fib, and there's a good chance we're going to straight line to it, I've got virtually no risk, and I've got very specific exit conditions. If I get a close on the wrong side of the triggers, I choose to exit the trade. If I do not get a close on the wrong side of the triggers, I'll hold this trade for eternity. But it means that I have to be active, and I can't get caught up on the fluctuations. I've just got one thing that's going to pull me out of this trade. Does that make sense, everybody? There's a lot of you that like to trade the gap theory, that like to say, oh man, they're a full bar away, let me trade the gap. And you do it with this look here instead of this look here. And there's a big difference in the likelihood of success. It's the same area. One has everything down against it. The other one has things going up. So the gap theory, Jared, this is a pattern that does two things. This is the pattern that will define the midband. So the gap theory, not the T-gap, the gap theory defines a large chart midband as a termination. So if that midband were floating out in the middle all by itself, the fact that price got to it, the large triggers were so far away, it'd be a termination. But what the gap theory says, and I'm just going to make it all on here, is the gap theory says if price accelerates away from the large triggers and hits an area, let's just call it that, price is more likely to close that gap to the large triggers if they are a full bar away. How do I know if they're a full bar away? Do you see how they were here? See how there was room for an entire reversal bar before they got to those triggers, Jared? That's what lets me know they're a full bar away. I can use this reversal bar marker. So this reversal bar marker is the exact price. Oh, look at that. It's still going up, guys. So this reversal bar marker, I have one on both charts. This is the exact price where this bar becomes a down bar. So these large triggers were above that reversal bar marker, which let me know that I had room and the gap theory was in play. Over here, I'm using that reversal bar marker as a reason to exit because it's going to tell me that price gets to the wrong side of these triggers. And Paul, your lesson is still going. Does that make sense, Jared? We teach this initially as how to identify the midband as a termination condition. You'll see it in the spreadsheet, gap theory, gap theory, gap theory, gap theory, gap theory. And it doesn't mean go long. What it means is maybe don't try that short into the midband. Don't take that trade against the gap. And that one takes a little bit to recognize. It really does. But you'll see it all day. There's a good example. Let me make it bigger. Price accelerates all the way up, fibs, midband, closes the gap back to the trigger. Does it here. Price hits the midband and fibs, closes the gap back to the trigger. Probably did it again somewhere in there, hard to read. There it is off to the left side. Hits it, closes the gap back to the large trigger. So that's a pretty powerful pattern. And all it does is it says, hey, that short is less likely to work because price loves to return to large triggers. And it turns out that's the exact same concept that gets you into the perfect trend trade. Because price returns back to large triggers, you start to look for areas inside of those triggers to take the trade. Paul, your trade worked out pretty good. How far is it going to go up, guys? Does anybody know? I personally have absolutely no idea. I have no idea how far it's going to go, but what I do know is that until I get a reversal bar on the other side of these triggers, I'm not exiting this trade because the market will go up. Where did you guys go? I just closed out my Discord on accident. Oh my gosh. Let me get back into the room. Can you guys still hear me? That was terrifying. And then of course, guys, if you did take this trade and you hit a giant pink line with all your triggers below, that wouldn't be a bad place to exit. Just take your money and run, right? You still made like $350 on the trade. You guys hear me okay? Whoops. Do we have volume, guys? I'm so sorry. Discord closed out on me. Awesome. So what I was saying, and I didn't have any audio, is that isn't 64.43, isn't a divergence high, price reaches it, all the triggers below, isn't that a great spot to just get paid and wait for the next trade? You could give it all back to 55 hoping it breaks, or you could let it break. Now, if this were my runner, I've already been paid. I've got nothing to lose. I mean, I've got $110 locked in. If I'm saying, you know what, these are up, everything here is up, I'm gonna take a chance. I'm gonna take a chance. I'm gonna see what happens here. Is it worth it to me from 66 to 55? Is it worth it to me to give $110 back to see if this breaks? Because the worst I can do in this trade is $210 if it hits my stop. I don't get mad about $200 ever. This is one of those times where I might let it run, where I might say, okay, they're going to have to come get me at the reversal bar marker. I refuse to exit this trade without that close on the other side. And you're going to watch it dance. And you're going to get scared. You're going to say, oh my gosh, I think they're coming for me. And you exit your position, and then they do exactly what they did. Nope, we're just going to go back up. Guys, there's fights. Remember when I said decisions are made at key areas? It's not a coincidence that the market slows down right at a key area. Because what's happening, and you can see it in the ask and bid, is very often these are pretty level. You can see the fight happening here. You can watch it happen in the single bar. That's why having rules is so much easier than letting your emotions, because I get all emotional. I get in the moment. I Whitney Houston it. I get so emotional, baby. But now I've got a concrete plan. I've got a definitive reason to exit. And if it doesn't hit that reason, I'm staying in it. Is that making sense to everybody? Is this a high probability trend trade? Nope. Is it counter trend? It is. But I sure do like being left of those triggers, guys. Look at your large chart. When did the market start up? When it closed on the other side of those small triggers. When did it stop going up? When it closed on the wrong side of those small triggers. Guys, you have a tighter picture here to not have to give that much back. And we're going to see. They might get us, they might not. Guys, what do you want to talk about? It's Friday. You guys are done posting pictures. We just want to watch this one. Does anybody have great plans for the weekend? I hope you do. Hope you're going to go do something fun. I hope you're going to go back and circle some tails, though. I would love to see you guys come back with a little bit of study. Sometimes I feel like the old bringing a horse to water trick, guys. My wife thinks it's funny. I'm like, they won't do the study. She's like, that's not your job. Your job's to teach them to reach the indicator, to read the indicators. Their job is to want to be successful and do the work. True story. My wife's an amazing woman, though. She's so much smarter than me. I'm married up. Totally married up. Paul, I think they're about to take you out of your trade, brother. It's so close. They're trying, aren't they? They're like, oh, let's go get Paul. We forgot to Paul stop out. Jen, I wish that were true. I love that, Chris. Do some market replay. Bring some pictures to class if you have questions. Jen, we found each other when neither of us felt very smart. It's kind of funny. We've been together almost 30 years. I was a bartender, and she was the best friend of one of my best friend's girlfriends. And she was a door girl at the club that I worked at. She got a job there. We were rock bottom and have gone upwards ever since. I'm a very fortunate man. They still didn't get you, Paul. They threatened. They scared you, right? Oh, man. I've got the best story, Chris. The older I get, the more I realize things don't happen by accident. Everything works out exactly how it's supposed to be. 30 years, Jen. See, I love that. I am a hopeless, hopeless romantic. So when people have that story, I get excited. 32, Jared. I love it. Claire, isn't that a good one? Do you know that it took me like 3 years before I ever learned that lesson? Jen, you're still young and young. You're still young. We all were in the beginning. That's why you find your person, so you can figure out how to get your poop in a group together. Claire, it literally took me 3.5, almost 4 years to learn that lesson. And it worked. You moved from Memphis to Tampa, met your wife 6 weeks after moving. I love it. When it's right, it's right. My wife was in Dallas with a friend. There you go. You're out. Reversal bar. And we met. And man, Jared, it was love at first sight. My entire world stopped when she walked into that room. And it's been stopping every day since. So how fortunate am I? And Paul, look what it's doing. Do you see it? So if you jumped in over here with a 3-tick stop, Doomsville, population U. If you jumped in over here, oh yeah. 3 ticks might be a little tight though, brother. 3 ticks is not a whole lot of stops. So maybe this gives you something to think about. And Claire, it makes it so that you don't really care what happens. You know what's going to take you out. And you know that if it doesn't hit that reversal bar marker, it's not taking you out. It can't. There's no way. It will continue up. it will continue down. And look at this. This is where they try to scare you. See how it goes into that but doesn't close above, and it goes into it but doesn't close above? It would have been so easy with a tight stop to get dinked right there, but that's where the move up starts. There's the exact same look. Get in with that second higher divergence, you're left of the triggers, and it's just Upsville, population U, all day. And then you see it start to stop. Same thing. And guys, you can use this idea for management too. Let's create a management lesson because I'm in a teachy mood. So let's say hypothetically, I enter right here behind the yellow box. That was the wrong way to do it. I enter right here, right? It's in today's video, Jared. It's not. These are things. So Jared, what you'll find is that there's a million videos with a million things. A lot of the lessons in this classroom are from what you guys present. It's what you guys present, and then I get to turn them into lessons because I've got this Rolodex of information. I've got this curse that I don't forget things. But let's talk about managing a trade. A lot of you guys take an exit at a divergence low, right? Hands in the air, mine's up there, this is what I do. So if I'm in a trend trade and it's going down and I'm left of the triggers, do I really need to exit, right? Do I need to take a stop right here? Do I need to take an exit right here? Do I need to panic right here? Sometimes it's better just to give a little bit back with the close. And what you'll find is management becomes easier because you're going to start to say to yourself, okay, I took the trade with momentum. I took the trade with path. I took the trade from the area inside of triggers. And now right here where I'm scared, guys, this is the most magical phrase in management. What changed? I'm in the trade. I had all the advantages. It's going down. What changed? Well, nothing. My small triggers went in the direction of my trade. Everything's going down. Nothing changed to create an exit. Question about divergence. If it held once, is it now resistance or support the next time? Great question. Let's answer it. I like that question. So check it out. We're going to simplify a little bit, Jared. So divergence is created and it extends to the right. Right here, anytime price approaches a divergence from a high, it has the potential to be resistance. Reaches divergence from a high, it has potential to be divergence. What you're going to notice, and let me back it up, is that it doesn't turn around and behave as support or resistance the way that a Fibonacci area does. So the Fibonacci area is concrete, and when it breaks, support becomes resistance. When divergence is broken or no longer in the mix, it just stops printing and goes away. So when this divergence gets taken out and the market goes up, that first divergence stops printing. And look at how long this divergence goes on. This divergence is still in play, and if price reaches it, it has the potential to be a termination condition. But until it does, this blue line's probably just going to keep going until the fib update. If price breaks above this divergence, Jared, you're going to watch it go away. It's no longer going to be present and in the mix. Great question. I've never had anyone ask that question about divergence behaving as support or resistance. So much that I had to think about it, go back and look at it, and I appreciate that. Man, keep them coming. I like the way you think. Guys, every now and then I'm challenged. There's people that come in this room and they challenge the way I teach something. And I love that because you guys make me a better teacher. You guys really will make me a better teacher. Here's a pretty good vision of it. So this divergence prints. When this one is true, that one stops printing. When this one is true, that one stops printing. So the market no longer has an opportunity to come back to it because the new information has been presented. And then this one continues, right, until that one prints. It's amazing how often the market does the same thing. It really is. A lot of you know where I'm going with this. So look at this pattern. And then let's go to the user guide real quick, to the termination condition section. Some people are awesome with patterns. Some people have to study them a little more. I tend to recognize patterns. I think it's a right brain thing. But let's put crude oil today next to crude oil 2021. And guys, tell me, and of course it's not exact, but what do you think? Price goes up and reaches a termination condition, isn't able to break it, comes back, retests support in a mid-band, goes up and retests resistance with weaker triggers. The one in 2021 made the market go down, right? Termination, weak triggers, more likely to hold, down it goes. Today, bad top, more likely to continue up, versus, strong top, more likely to retest and continue down. Bad top, more likely for continuation up. Strong top, less likely to continue up. So defining where it comes from pays dividends. And very often, guys, your buyers know where this Fibonacci level is. And when they can't get there on the first run, and you see that, this is what John calls finishing the business. Very often, you'll see them try to get to that next key area. And let's see if we can find examples of that. Bad top, right to the mid-band, right to the support, triggers don't follow. They tried to push back up. The buyers or the sellers said no and took them right to Fibonacci support. The buyer said, we're going to give it another try. Bad top, pulls right back, and they're giving it their all, guys. They're giving it everything they know how to give. Oh, that's a good story, Paul. I'm sorry you guys have to struggle with that. So I hope that lesson makes sense. From a bad top, the market's more likely to push up. You still have to wait for the rules to be met. But you can see where the continuation tends to happen. Right around the mid-band, bad top, right to the mid-band and fib, continuation up. Bad bottom, right to the mid-band and fib, continuation right down to the key area, and that's where the reversal comes from. Bad top, right to the mid-band. No, Peter, I'm totally okay with it. The only thing I'll ever get weird about is don't call trades and don't talk politics. Bad top, they try to push back up, are unable, that's where it goes down. Bad top, they continue to the fib. Are you guys seeing the pattern? Bad top, back to the mid-band, they fight a little bit, but they make it to the fib. Bad top, right back to the mid-band support, they go to push up. I love it. It's all patterns. Bad top, continues up and hits the fib. Bad bottom, pulls back, continues down to the fib. Bad bottom, pulls back, continues down to the termination. Bad top, continues up. They just don't have the fight. So while bad tops and bottoms are not they're not mandatory, guys, there's a lot of information that comes from them that you'll begin to recognize second nature. I think that's probably it for me. Let me end today's broadcast. And again, guys, I am so terribly